What's up, everyone? Drew, aka Catching Rockets here. Just to start out, for people that might be new to watching my videos, particularly, I do not consider myself a YouTuber. I do not consider myself a professional YouTuber. Um, so, with that said, I say a lot. This isn't going to be, like some quality production, whatever. However, the information will be very high quality, all about um, disseminating the information to you guys. I'm starting out with a clean chart, no indicators, and I'm literally going to go through the indicators that I use, the settings that I use, how to find levels, how to trade the levels, book recommendations, and then we're going to start going over. And then we'll also start going over some trading psychology stuff. So with that said, let's dive into it. The first thing that we're going to do is add the indicators that we need. I have mine favorited, but we'll start just by typing SVP, or Session Volume Profile, is going to be one of the ones that you need. If you put a star next to it like I did, it'll show up on a favorite bar, it shows up in your favorites, so it's quick and easy to find. Do not make the mistake of using Session Volume Profile HD. Next, we're going to want Fixed Range Volume Profile. This one, if you put a star next to it, it'll put it onto a bar for you. So mine is here. And then we also want PVP, which is Periodic Volume Profile. So we're going to add that. And from there, I'm going to turn these off. On my volume, I like to have a moving average. So under my settings, if I go to input, moving average length, I use 9. And then under style, you would check volume, moving average, and then it will show the moving average on your chart. For me, this is more important when I'm on like a 1-day chart. Then I can compare, like volume compared to the last 9 days. And also I just use, I just look at volume to see, like for instance here where we have this massive volume spike on April 25th. I like to look back and be like, when's the last time we had volume, that matches this? And you can go all the way back to January of 22 to find volume almost equal to this, but not even quite as good, not even quite as high. So with that said, we're going to start out with, and then also, there's one more that you can use, which is Visible Range Volume Profile. For me, this is the one I use the least, but definitely something that you can use. Under settings, we're going to go to row size 100, and value area volume is going to be 68. And then under style, we're going to check value area high, value area low, and POC. For me, I like to color code these just so it's easy for me to see what I'm looking at a glance. I've been using these same colors for a long time. And so you might want to figure out colors that you like so you know at a quick glance if you're looking at your value area high, value area low, or your POC. For right now, we're going to turn off the Visible Range Volume Profile. But basically how this works is whatever information I'm looking at on the chart, this profile will change based on how much information is available, right? So you can see it's shifting as I'm moving my my screen around. But so we're going to turn this off for right now. And we're going to talk about what volume profile is. And we'll just start out by drawing like a fixed range volume profile and then explaining exactly what you're looking at a lot of people are probably used to volume at time, which is where we have, on the bottom of our chart, we have volume, based on whatever time frame we're looking at, which gives you the entire volume for that time frame. So like right now, if I'm looking at the daily, each bar gives me the volume for that entire day, right? If I go to a lower time frame, then each bar would represent 30 minutes in this case, since I'm looking at a 30-minute chart. So with fixed range volume profile, we select an area that we want to highlight, basically. And so in this case, what I'm doing is I'm grabbing an uptrend, right? So I grabbed the bottom candle all the way up to the top candle, and that gives me this current uptrend. And then the same with the fixed range volume profile, I need to change my row size to 100 and my value area to 68, right? And under style, check value area high, value area low, POC. And within this, basically, if I hide my candlesticks, I know there's a way to do it. Okay. So now if we're just looking at the profile, instead of volume at time, we now have volume at price. So basically, if we look at 590 and roughly 26 cents would be the highest volume during this period that we selected on this chart. So the largest volume that occurred on SPY is at 590 and roughly 26 cents, I think I said. But so this gives us a lot of information. You'll see people drawing supply and demand, and basically they're going to highlight the large volume node on the chart. And with this here, like we can select each area where the high volume nodes are occurring. Something like this, it's a little bit harder to really pinpoint where they are, but we'll just say something like this, and then something like this. And I'm not really, I don't trade drawing big blocks like this. I'll tell you guys exactly how I trade as we get through this video. But right now I'm just drawing this for explanation purposes. And obviously I hid the candlesticks. I didn't sit here and memorize what the candlesticks were doing before I went live. So I'm going to explain to you how without candlesticks we can kind of get an idea of what price did just by looking at the volume profile. And so when we highlight an uptrend like we did, we're basically looking at where buyers are. If we highlight a downtrend, we're looking at where sellers are. So in this case, we highlighted an uptrend, and we're looking at where buyers have really stepped in. And wherever you have like a larger volume node, so this one's smaller, right? This one's a little bit bigger, meaning there's more volume. It's going out further. It's actually the second largest amount of volume on this profile that we're looking at. And then, of course, this one up here is the largest volume that we're looking at on this day. I like to think of these as either stairs or as rungs on a ladder, right? And so when we're walking upstairs, or when we're walking up a ladder, or going up a ladder or down a ladder or downstairs, we can't stand in this empty space between the stairs, or in the empty space between the rungs, right? There's nothing to support us in these areas. And the same thing applies to stocks or to candlesticks. So when we're trading in an area where there's a volume node or a stair or a rung, whatever you want to call it, whatever you want to consider it, price can hang out here, right? And since this is a smaller node, they probably just hung out a little bit. And then once they broke into this free space here, they probably just did a little grind up, right? And then once we got to this rung here, they were able to hang out a little bit more. And then when they broke through, probably pretty quickly went up to this next area here, and then hung out a little bit. Ended up breaking through. This area we definitely went through very quickly because there's really not much volume at all. And then we came to here, and then we were able to hang out a little bit. And then from there, once we broke through here, again, there's actually areas where there's no volume, which means that price just flew through this, right? At least till it got to about here. We might have seen like a little bit of selling and so on and so forth right through here. But then once we got to this large area here, they really spent time through here, right? And then from there, we don't know what they did because that's the end of our profile. But if I turn our candlesticks back on, this is always, oh, there we go. So again, I did not memorize this. We'll look and see, how accurate I am just based on the volume profile. But as you can see, here at the bottom, we were kind of just hanging out sideways, right? They actually gapped up to our next level here, and then quickly sold off from there, and then they hung out again, and then quickly gapped up to this area here where they had a little selling candle, and then were able to go back up into this area and hang out for a minute, and then quickly back down into here. We didn't really get a bounce in here, but then they bounced here, and then they hung out here for a little bit, right? Which is exactly what we were talking about here. Pretty quickly came back up. Again, we have a gap, and then they hung out through here, which again is what we were talking about. And then they sold off to this level, bounced back to the next level, sold off again, hung out some more, came almost back down to this node here, and then broke back through, hung out, gapped up, hung out some more. There is a little gap back down here. And then you can see from here to here, we traveled very quickly, right? And then we're hanging out here, which is exactly what we predicted. And they're hanging out, and then we gap up, right? Traveled fairly quickly up until this area. And then again, the same thing. This is the area where they spent the most time just kind of trading sideways, right? One of the things that I also would like for you guys to notice is generally where we have these nodes, they go to the far side. So if we're selling off, they're generally going to come down to this far side before they bounce. Or even when we're moving up, they're generally going to go to the far side before they reject back down. Or here in this case, we went to the far side, rejected back down, bounced, were able to break through. On this one, they didn't make it to the far side. But then here again, they come back to the far side. So more often than not, if price is moving up, they're going to go to the far side of a node. If price is moving down, they're going to go to the far side of the node. Again, not 100%, doesn't happen all the time, but that's what you see the most common. I would say probably like 70 to 80% of the time, you're going to go to the far side of the node. If price is pushing down, you're going to go to the bottom of the node. If price is pushing up, you're going to go to the top of the node. Okay. And just a heads up, there's always time for questions. So if anything's not making sense, if anything's not clicking, please ask questions in the YouTube chat, and that way I can answer you. Right now I have people like DMing me. I don't really think I have time to look at DMs. It might be something important. It says sorry, accident. Okay, that was not important. I just wanted to make sure it wasn't like an admin or a mod or something telling me that something's not good. So from here, I'm going to go ahead and delete all of these drawings. But the key thing to remember is just that we're looking at whatever you want to call it, volume shelves, stairs on a ladder, or rungs on a ladder, or stairs on a staircase, and that price can quickly move from one stair to the next, but there's nothing to support it in between, so it can't really hang out where we have these open spaces, right? And then this area here where there's just no volume at all, right? They didn't hang out at all. They had to gap through it. So anyway, just something to notice. From here, I want to talk really quickly and basically about some very basic market structure. Most people should understand this. If you don't understand this, highly recommend that you read a book called, sorry, bear with me. Getting Started in Technical Analysis by Jack D. Swagger. And I'll post a link for this in the chat. All of the books that I'm going to reference, I will post links for in the chat. And with this book, I will say it can be pretty complicated for a lot of people. And I'll say don't let yourself get overwhelmed. Like, you don't need to try to memorize this. You just want to read it till you have an understanding of market structure, technical analysis, things like that. You're not going to, you don't need to memorize it. You don't need to like stress yourself out and, you know, try to read the book 16 times or anything like that. You just need a good basic understanding. Okay. So with that said, this next part should be pretty simple for most people. In the market, we never are going to go straight up, except for when Trump is in office. We're gonna have pullbacks along the way, right? And so this here would be considered an uptrend where we're making a higher high, a higher low, higher high, higher low, higher high. The next type of structure that we're going to be watching is where we're trading sideways, right? And that's where we're making equal lows and equal highs along the way. And I'll actually show you guys a very good example of this. And this is actually one of my favorite patterns because it's so easy to trade. You literally just short the top or grab puts at the top, long the bottom or grab calls at the bottom. And eventually it's going to break and it's going to go against you. But if I happen to take short here or take puts here, right, and then close and reverse to calls, and then close and reverse to puts, and then close and reverse to calls, and then close and reverse to puts, and then close and reverse to calls, and then it does this, I'm solid. I just got 5 winning trades in a row and 1 losing trade. I will take those odds all day long, every day, any day, no questions asked. And this is, I guess this will be like a trading psychology piece. You're going to take losses. And until you accept as a trader that you're going to take losses, you will never succeed in this game. And just while I'm thinking about it, I'm going to speak on it. If you go, you know, like if you get these, whatever, 6 trades in a row, and then this 1 losing trade, you're like, oh crap, let me start averaging down. You know, let me buy more contracts. I know I'm right. It's got to go my way, blah, 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 blah. That's where you blow your account, which if you think about it, it's outrageous. Like 6 winning trades in a row and 1 losing trade has you freaking out and doing everything that you shouldn't do as a trader. Don't be this person. Don't be the person that when a trade goes against you, you start moving your stop loss further out. You start averaging down, trying to throw more money at the trade to make it good, even though it's not. Be the trader that accepts your risk, has a level where you're planning on closing your trade if it goes against you. Close the trade, and live to trade another day. Okay. Probabilities, you could be wrong 18 times in a row. So when you are wrong on a trade, just don't try to force it. Don't FOMO. Don't chase. Don't throw more money at a bad trade. Just take your loss, pull up your pants, and walk away. Okay? And then the next thing on market structure that we're going to be looking at would be our downtrend, right? And this is where we're making lower lows, lower highs, lower low, lower high, lower low, right? And those are the three types of patterns that we're going to see on charts. And then I showed you guys, or I told you guys I would show you like an instance of sideways price action and how to trade it. If we go to Amazon, I always love showing this. I just think it's like the coolest thing ever. We could actually go to a 1 month chart, which is insane. Like every candle, why don't I, oh, I have my candles turned off. This is cute. So every single candle is 1 month long, right? And if we draw a box right here, this gives us this range that they were trading in for a while, right? The only thing that's difficult about trading this is you do get false breakouts, right? But as long as you're trading with proper risk management, proper risk to reward, you'll still make money if you're trading correctly. So really quickly on this tool here, the rectangle tool, if we double click this under style, there's the middle line, which I leave checked because later in this video, we'll be talking about, and this will answer, sorry, whose question was it? Eric's question about if I'm going to be using TPO. I'm going to be using some very basic TPO stuff. And when I use TPO, I like to draw rectangles to find the midpoint of like my single prints. And so if I have that turned on, the middle line, that it's easy for me to figure out where the midpoint is on my single prints or whatever else where I'm trying to find the midpoint without like busting out a calculator and doing math, right? So the way that you trade these, obviously like on these fake breakouts, you're going to have to figure out an area where you're getting stopped out, right? But where we actually break out and go, you know, like you would make your money back and then some. Or even better in this case, we broke out and then we retested the box and then made the big move. When you have something like this, and the one thing I forgot to show you guys is if we draw a date range on this, it will show us that we traded in this range on Amazon for 639 days. So for 639 days, you could buy or sell the top, buy the bottom over and over again. You might have got stopped out a couple of times, but you would have made bank, right? The way that you figure out how to take a trade or where to close your trade, I should say, on these breakouts, or when you have like sideways price action, you draw a rectangle and then you're going to clone that rectangle. If I could get it. There we go. And let's make this a different color so that it stands out. So if we take the rectangle, when you have price movement like this, it's going to be a measured move. So if we break out to the upside, the measured move should be the top of the rectangle. If we break out to the downside, the measured move should be the bottom of the rectangle. And as you can see in this instance where here we broke out, if you closed at the bottom of the rectangle, you're not too far off from getting the bottom. I mean, it's not perfect, but it's a good a good guide on where to close your trade, right? I'm going to delete this one on the top since we broke out to the downside. And I'm about to show you guys something that we're going to touch on more later. I'm not going to explain it right now. I'm going to show it, and then when I explain it, it'll make more sense to you. But right here, we have a poor low or an incomplete auction, right? So if we really zoom in, these two candles here, some people would call this an equal low or a double bottom, right? If it was on the top, they would call it a double top. For me, this is a failed auction or a poor low or an incomplete auction. And if somebody calls it, a double bottom, I'm going to know exactly what they're saying. And in my head, I'm still going to be thinking of it as a poor low or as a failed auction or incomplete auction. And whenever you have that, price is generally going to want to break through that area and go lower and create a new lower low. They're going to want to clean up this failed auction and complete the auction, which is exactly what happened. So from here, we had that double bottom or poor low, failed auction, whatever you want to call it. We bounced, came back and retested the bottom of our box, and then sold off. And instead, this time, instead of closing here, we go, oh, we've got a failed auction or a poor low. Price is going to go lower. We know, worst case scenario, we can close our trade right here. And we're going to be golden. And if you want to push it, you can actually close it lower because they're going to want to go lower and make a new lower low. Okay. We're going to be talking about the poor lows, poor highs, strong highs, strong lows, single prints. We're going to go through all of that a little bit later. But just since there was such a good example, I wanted to show you guys while we're here looking at it. Okay. Let me delete all of this really quickly. There's a few things where we can use measured moves, and we're going to be talking about those today. Not all of them, but some of them, to give you a good idea of where to close your trades. Right. Okay. I'm going to be deleting this. And also this profile here. From here, we're going to kind of zoom out. We're going to go to the one-day chart. And I'm going to show you guys something pretty cool. So first, we're going to go to our PVP indicator. We're going to click the eyeball to show it. And then we're going to go to our settings. And for one, we're going to check value area high, value area low, and POC. I'm going to color code these really quick just so that stands out for me. And under input, we're going to go value area volume 68. And we're going to go row size 100. Okay. And then from there, we're going to change this to 12 and then months. Right? And so what this does is it gives us our our yearly levels, right? If price was trading down here, I would want to have my 2023 levels charted, but we're not trading down here. We're trading up. Well, right now we're up here. But I don't have levels up here other than what's developing, and I don't plot developing levels. So I'm going to plot just my 2023 levels. And from there, I'll show you guys something pretty cool. So I use templates. I don't bother doing like the year or the months because I don't think like I only chart monthly levels once a month, and I only chart yearly levels once a year. And so I just use like my previous week levels, and then just change quickly the text to 2024 value area high. And then also I'll just show you guys, just because stuff that took me a while to learn. Where is it? Oh, so it's up here. See, so I have 2 points selected. And the reason I do that is it perfectly encompasses the line that's below it. So like if I change this to 1 pixel, sometimes you can see a little bit of the blue line below it. So 2 pixel I found just works better. That's being like super, super detailed, but I'm extremely anal when I chart. And I just have to have perfection. That's just me as a person. That's me how I chart. That's me how I trade. But I figure I would share with you guys what I figured out, what I like, what works for me. And then, of course, on your own charts, you can do whatever is best for you and what you like. And so from here, again, change this to 2024. And then we're going to explain what all of this stuff is. Okay. Oops. Okay. So if we look at the big picture here, I don't know that this is the best profile. Let's see if we can find one that's a little bit cleaner. This is a nice one. So we'll use this as an example. When we're looking at profiles, and we're going to cover the important volume profiles, and what we're going to do is, sorry. No. Okay. So this here is what we consider a D-shaped volume profile. Right? It's a capital D. And basically what that means is, I mean, it's kind of on a yearly profile like this, it's a little bit harder to see, but basically price is mostly consolidated in this zone here, right? Obviously, we have volume traded down here, and we have a little bit of volume traded up here, but the majority of the volume was traded in the middle, right? And so what we're looking at is, I'm sure everybody remembers from high school, like a lot of us were graded on a bell curve, and that's exactly what we're looking at, right? So if we're looking at the bell, we have 68% of our volume is traded in the middle. And this is going to be like our A and B students and C students. Or no, this would probably be, yeah, A, B, and C. And then the rest of our volume is going to be traded out at, I don't remember the exact number, but it's like 95 point. Actually, I'll pull up the exact number because I don't want to make it up. Let's see. Let me find it for you guys. So basically, we have 34.1% on one half, 34.1% on the other half. And then from here, it's 13.6 and 13.6. And then the remainder of the volume is going to be 99.7 and 99.7. So basically what that gives us is 68.2 in the middle, but we're not able to, when we do our inputs, there's no point. So we just go with 68. And then the further out extremes is going to be 95.4. But again, we can't select 95.4, so we use 95 on this value area volume. We're going to talk about this more in a minute. But that's going to be when we start talking about SIGs. But right now I'm just explaining the volume profile. But so 95 would be the further extremes of our volume profile, right? And then lastly is going to be 99, and the actual number is 99.7, but again, we can't use a decimal point. And so this is the far extreme of our bell curve, right? And when we're looking at volume profile, we're interested in basically a couple of things. Basically, when we're trading through this area here, basically what it's telling us is all of the participants in the market are happy trading through here, right? Buyers and sellers are both content being in this area when we have a D-shaped profile, right? When we're trading within this area, this would be considered in value, right? So we're always either in value or out of value, right? This here would be out of value as well. Okay. And when we trade with volume profile, it gives us the ability like to, and again, this is stuff that we'll get into a little bit more when we talk about specific trading scenarios and specific trading setups. But we get to figure out like things like this where they quickly went out of value. Actually, I probably need to zoom in more. Sorry. Let me do that. I think brush might give me a sharper. But so here we quickly went out of value, right? And then it wasn't accepted, meaning that the sellers were not aggressive enough. And so we quickly went back into value. And there's an actual rule that says it's the 80% rule, and we'll probably cover it more later. But if price leaves value and spends at least 30 minutes below, which in this case we're on daily candles, so we spent 2 full days below, and then comes back inside value and spends at least 15 minutes above and then retests our value area low, this is where we would initiate calls, and you trade it all the way up to the other side of value, and there's an 80% chance. I don't know if I can draw. Yeah, I can. There's an 80% chance that you will go from one extreme to the other. This is called the 80% rule. You can actually Google this if you want to read about it more, or if you don't understand from what I'm saying. But we'll cover this again later, and I'll go over once again the very specific like times that you're looking for. You're looking to spend at least 45 minutes outside of value, come back inside, spend 15 minutes or more inside of value, and then you're looking for a retest of your value area low in this instance. And once you get that, you would grab calls and you play them all the way to the far side. Obviously, when we're dealing like with daily candlesticks like we are here, you're going to have to take a swing trade, that's going to last, in this case, 52 days. So you would need, like a couple months or even 3 months out, or 8 weeks out or something like that. 10 weeks out, if you were looking to try to catch such a big move. And then a lot of times people will ask me like, well, how do you figure out how many days, like how far out to get your contract if you're looking to go from this extreme to this extreme? And the best advice I can give you is you grab the price range tool in TradingView. You find the top of the range that you're targeting. You find the bottom of the range that you're targeting. And then you grab this and you figure out like, basically, if I'm trying to go, from here to here, how many days does it take them on average to do that? And so, from here you would grab your date range tool and go like this. And in this case, it took them 43 days, right? But you're not going to go just off of one move. So you'd want to grab like another one and figure out, okay, so how long did it take to go from here to here? And in this case, it's 33 days. And you're just going to, do it a few times. Maybe look at an area where price is choppy. So like this here, oops, where it would have taken us longer to make this move, I guess. There. And then draw your date range from this candle all the way to here, and it took 124 days to make that move. And then from there, you can get, like a good idea of how far out you need to get those contracts in order to catch a move of that size. Hopefully that makes sense to everybody. Hopefully I've explained it well. That's how I calculate my swing trades. Okay. Sorry, just delete this really quick. I should mention right now, while I'm not like actually teaching, being that this is going to be a longer class, there's probably going to be times where I'm going to need to take a break, either to run to the restroom or grab some water. Just giving you guys a heads up. So, like I said, I'm going to show you guys something cool on this. If we go back to our current profile, and we just talked about the 80% rule, right? So back, right here, actually, let me turn this off just to clean everything up. We have our 2024 value area high, POC, and 2024 value area low. Here we go. From where we broke out here, all the way till here, I think everybody can agree we spent more than 45 minutes outside, without me even drawing like anything. We spent almost 200 days outside of our value area, right? I know myself as a trader, when we started to come back inside here, I got very excited. And we started swinging puts, right? And we were targeting the 2024 value area low, right? I will say we didn't quite get there, right? We went to 481.80. So we were about $1 off. And what I say to people, like as a day trader, you generally want to have about a 25-cent bracket around a level. I know I'm not drawing a 25-cent bracket, but we'll just pretend that this box is 25 cents on either side of this line. So in this case, it would be 50 cents. And let me actually just make this smaller, because I'm not trying to make it encompass this candlestick here, because I'm talking about day trading. I'm not talking about a massive swing position, right? But so as a day trader, and this is specific for SPY, if you're trading something else like Tesla or Amazon or whatever, Apple, you need to figure out kind of like what size range to put around each line, to enter your trades or to close your trades. So in this case, taking this massive swing trade, I think it's pretty safe to say like you could use like 1.5 points around your level on either side to open and close your position. And in which case, like this hit, right? Anyway, I'm going to talk a little bit about trading psychology here. I'm going to talk about stop loss, take profits, things like that. We're going to cover this more later, but this is really important, okay? And actually, let me do this really quick because I'm trying not to look at the candles. You guys can't see that, but my eyes, I'm not looking at what happened here. I'm going to explain to you how I find my stop loss when I'm looking to take a trade. And so let's delete this little box down here. On TradingView, we have the long position tool, which would be our calls, and we have our short position tool, which would be our puts. They're located, 1, 2, 3, 4, 5 down from the top, long position, short position. You should be using this on every single trade that you take. And you might be like, oh, I don't have time to do that. You always have time. And I'll explain why. Thank you, the key, Ron Key. Appreciate that. I'm assuming that's Spy King Key, I believe. I could be wrong. But anyway, so we're going to use this long, or in this case, short position tool, which would be for our puts, right? And you basically draw from your entry to your take profit. And then from there, you have to figure out where to place your stop loss, right? And whenever I'm looking at where to place my stop loss, this is something we're going to talk about, again, more in depth later. But I start looking like for key levels on the chart. So like if I draw a line right about there, this is going to be a key support resistance level, right? Just based on looking with my eyes, you always want to look left. And when you look left, it might take time, but the more that you chart, the more that you spend time looking at charts, the more this stuff will just kind of pop out at you, and you won't have to spend as much time looking for it. I'm going to zoom in kind of for you guys, but if we look here, I don't know how far I need to go with this line, but let's do something like this. And this isn't even as clean as I would like for it to be, but I think this is my best possible support resistance that I see. You could even argue that you have a better support resistance level right there. And I'll discuss both. I'm going to take this one off really quick, just to kind of show you guys exactly what I'm looking at. But what we have here is a level where here we kind of came to it, we rejected, right? We broke through, and then once we were above it, it acted as support. And then it acted as support again here, right? We bounced off of it twice. This, you guys might not understand right now, but this is very important. When you have a strong level, whether it be support or resistance, sometimes price has to gap through it because it's not able to get through it during normal trading hours. So right here, we gapped through this, what is potentially a strong level. And once we were below it, then it acts as resistance. And then here, we came up to it and we closed the price for the day, right? And then the next time the market opens, we gapped way through this, again, what I think is probably an important or a key support resistance level, right? Here we hit it again and we bounced off of it hard, right? I'm going to tell you guys right now, I didn't sit down at the chart and spend hours memorizing candlesticks so I can try to look right in front of all of you guys. I'll be happy to review trades where I've been wrong. I'm happy to review trades where I'm right. And again, going back to the trading psychology aspect, there's going to be times where you're wrong or where the setup is good, but probabilities go against you and the trade doesn't work out in your favor, right? And there's going to be more times where the setup is good and probabilities work out in your favor and the trade works out, right? So I have no issue reviewing where things went against me due to the simple math of like trading psychology. Like sometimes it goes against you, sometimes it works in your favor. So here we came to it. We did manage to wick down below, but then we bounced again, right? And then here we wicked through it, bounced a little bit, and then finally broke down through this level. But then here it acts as resistance again when we came up and tapped it from below, right? And that's all the information we have about this level as of right now, right? So I'm going to delete that line. So for me, this is a very important support resistance level, right? When I'm looking to take a trade, and this is important, I'm going to pull up a little chart for you guys. So this is risk reward versus win rate. Okay. So if we grab this little chart here, hopefully it's big enough for you guys to see. If I'm a 50% trader, right, and I use a minimum of risking $1 to make 2, I will be profitable. If I use 1 to 3, I'm going to be way more profitable. If I use 1 to 1, it says I'll be break even, but that's not true because there's fees. So I'm always going to be at a loss if I'm using 1 to 1 risk to reward. And then the bigger my risk to reward, the more and more profitable I'm going to be, even at 50% win rate, right? And if I'm using even a 1 to 3 risk to reward, I only have to be right about 34% of the time to make money. And this isn't like BS money. This is like get rich money. If you're just consistent and you trade within your means based on your account size. And the key is like, it's not taking small losses and big wins. It's measuring how much you're willing to risk on each trade and how much you have to make in order to take that trade. And the minimum that you want to be at is risking $1 to make 2. And again, the further away you go from that, 1 to make 4, 1 to make 5, 1 to make 6, so on and so forth, like your win rate can go all the way down to only needing to be 20% correct if you're trading at 1 to 9 risk to reward, right? This is important math. And using volume profile, if you're doing things correctly, you should be right around a 60 to 70% win rate trader, which puts you, if you're at 1 to 2, you're making really good money, right? And obviously the further away you go from that, the more and more you're making. But just by being, just trading off of volume profile alone, trading with proper risk management at a 1 to 2 risk to reward ratio or a 1 to 3 risk to reward ratio, you will become super rich, like millionaire rich. Okay. So this is one of the most important things that I can teach you is everybody's always focused on setups, how to take the trades, blah, 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 blah. The most important thing is your risk to reward ratio. Figuring out something that gives you a little bit of an advantage and just trade it over and over and over and over and over and over again. It's going to get boring as hell, sitting there waiting for the same setup day after day after day. But if you do it properly, it's worth your time of sitting there bored. Okay. So with that said, on this tool, my short position, long position, right here, it tells me my risk to reward ratio. I'll zoom in a little bit just because I know this stuff can look small on YouTube. But right now, with where I have things drawn, my risk to reward is 5.3. So for every dollar that I'm risking, if I took the trade the way I have it laid out right now, I would be making $5.30 for every $1 I risk. If we go back to that chart, 5 to 3 puts me at only needing to be correct 20% of the time, which, if you know, we're talking about an 80% win rate trade setup. And with an 80% win rate trade setup, I'm going to be correct 80% of the time, not 20% of the time. So I actually have a student that only traded this setup, which takes a ton of discipline and a ton of patience, because if you're trading SPY, you might see the 80% rule play out like once or twice a week. And so he was just sitting there patiently waiting. But after, I want to say, like 3 weeks, I think it was, of trading only the 80% rule, this guy like doubled his account, and he was up like $3,000. Okay. And if you're doubling your account like every 3 weeks, you're going to get super, super rich. Anyway, so based on that information, knowing that this is a really strong key support resistance level, if I'm planning my stop loss, I would be stupid to have it below this level, right? Because if they're trying to stop me out, there's a good chance they're going to come to here, and then they're going to reject, and they're going to go play out and do the trade, right? So I know I need my stop loss above this level. I don't want it exactly at this level, because realistically, what market makers are going to do, it's not going to let me grab that arrow. Okay. What they're actually going to do is they're going to go slightly above, grab all the liquidity, and then start, playing this out. Obviously, sometimes that doesn't happen. Sometimes they just go bloop and do it right away, and we don't, we're not red. Those are the dream trades that we all love, but sometimes they're going to go grab that liquidity and then make the move, right? So me, as a trader that understands this, I know I want my stop loss to be at least above that level, right? And still here, I'm at 3.5 to 1. And then let's look at that other support resistance level that we also were looking at earlier, right? So let me bring this down out of the way. I'm going to apologize, everybody. Apparently my son decided it's time to practice drums, so you're probably going to hear his drums, but it is what it is. Like I said, I am not a professional YouTuber. I'm not sitting in a private, quiet room. But so anyway, we've already talked about basically identifying, like our support resistance level. Actually, let me drag this further this way, because here it acted as resistance, became support. We broke through, became resistance, support, and then chopped through it a little bit, gapped above it, right? And then here, support again, support, we broke through. And then here we bounced off of it again and then broke through, right? And then once we were below it, it acted as resistance again right there, right? So me as a trader, I'm going to go, there is a support resistance level here, but there's also one right above it. And what if they go to here and try to stop me out, right? And then make the move. So ideally, if I can still be at least 2 to 1 or more and have my stop loss slightly above this, that would be ideal, right? If I can't, if it's got to be like here because of the risk to reward or whatever, I would still take the trade because I'm above what is a key support resistance level. But again, in this instance, I recognize there's two. I have a decent support resistance level here, and I have another support resistance level right above it. And I would like to have my stop loss above that, ideally, right? Again, I didn't memorize any of this. I might still get stopped out based on this information. And so now we'll turn off the replay mode and we'll just kind of see what happened. In this case, they actually came right back to our first support resistance zone and rejected from there, right? And absolutely like no surprise. And if we even look like really closely, they actually barely wicked through it, right? So like if we put our stop loss right at that level, they would have hit us. which again is why we say it's got to be at least a little bit above. But in this case, we recognize there's a second support resistance level right above that that's important that we would like to have our stop loss above, right? So in this case, they got pretty close to our stop loss, closer than I would like for them to. But then after that, they played out the full move pretty quickly, right? Everybody on board with this? Making sense to everybody? It's barely audible. Oh, is that why you guys are saying like the headphone thing? Because I'm not loud enough? Or headphones to show respect, I think. My mic might have moved a little bit far away from my mouth. I apologize if that's the case. Hopefully all of this is making sense to everybody. We still really haven't like, oh, the drums aren't audible. Okay, cool. I mean, if they are, it is what it is. At least he's a good drummer, so it wouldn't be bad to hear, you know. We still have a ton to explain and a ton to go over. But I'm hoping it's starting to click at least a little bit, right? And so when I say this, it's no disrespect to anybody, and I'm not trying to put anybody down. That's weird. Why is it not showing this played out? Because it did. Oh, well, it doesn't matter. But oh, I see. Because we had to close, like, you know, whatever it was, a point above the actual level. But you can also see, so when you use the short position tool, it will actually highlight. So like if I go down like this, sorry, it'll highlight how deep I am in profit or whatever, based on the candlesticks, or how deep I am red, you know, based on the candlesticks. So it's pretty cool. Anyway, let me delete this. What was I going to say? Let me take a sip of water really quick while I try to remember what my thought trajectory was when I distracted myself with the chart. I think what I was basically getting at is we still have, oh, sorry, I know exactly where I was going to go. So when I say this, really, like, I'm not trying to disrespect anybody or talk bad about anybody. Some people say this and they truly believe it, but for me, it's actually like a pet peeve. When I see somebody say take, or see profit, take profit, it actually like bugs me to my core, right? So we just talked about, you know, we pulled up that risk to reward chart and showed, you know, one risk to reward, and how, what's it called? You know, like if you're using a proper risk to reward ratio, that, you know, even if you have a 60 or 70% win rate, like you're going to make a lot of money. The problem is people don't let their trades play out. And so what ends up happening, like, let's just, let me put my, this back on the chart. So what ends up happening is a lot of people, they'll plan their trade. I don't think the average people plan as well as I did here. I know my students do. And if you want to be a successful trader, you need to plan your trades. You need to make sure that you're using proper risk to reward. And if the setup isn't allowing for proper risk to reward, you don't take the trade, right? And so basically with this said, like, we have our stop loss here based on a key level, right? We identified a key support resistance level that we knew we wanted our stop loss to be above. And then we identified a second key support resistance level that we knew we wanted our stop loss to be above. And once we do that, we never want to move those levels, right? And then we identified where we want our take profit to be. In this case, being like a massive swing trade. I'm saying like a point or a point and a half zone around your actual level that you're targeting. For day trades on SPY, again, I would use 25 cents on each side, right? But so what ends up happening is a lot of people, when they're red on a trade, so in this instance here, it went through our level and then gave us our retest, and this is where we entered the trade. And then it started going in our direction. And a lot of people at this point, they'll grab their stop loss and pull it down. And if you did that, you got stopped out, right? And you got stopped out where you were risking, in this instance, you were risking 27 points on SPY, and you only made, I'm going to have to zoom in a lot to do this because it's a really small area. But since you trailed your stop loss down, you ended up making only 3.5 or 3.3 points on SPY. So if we're risking 27 to make 3.3, we're going to be losing a ton of money because probabilities are not going to be in our favor. And, things are going to go against us. And, probabilities in trading say that we're going to be right. Again, a good trader, a really, really good trader, actually like the best trader I know, is right about 80% of the time. If you're right 60 to 70% of the time, pat yourself on the back. As long as you use proper risk to reward, you're going to be successful and you're going to make money. I know I'm talking about this a lot, but it's so important. So in this instance, if you trail your stop loss down, you just risk 27 points to make 3.3. You're at a negative risk to reward in this instance. Like you're risking way too much to make way too little, right? Let me go back and remove this stuff. So anyway, if you start trailing your stop loss, or you say like, oh, see profit, take profit, again, we're risking 27 to make not enough, right? We have to let our trade play out. One of the biggest, most common mistakes that traders make is, let's just say they start doing this, right? And then traders go, oh crap, like what if they stop me out? Let me move this higher. And now I'm risking $1 to make 1.69. Sorry, that was not intentional. So I have to have like a really high win rate in order to be profitable, taking trades like this, right? And then what will end up happening is eventually, or if I'm a really, really bad trader, and I'm sorry if this hits anybody in the feelings, but it's just the reality of it, they'll go, wow, I'm down a lot. So like if I buy 2 more contracts here, then if they come back to here, I can close and I would have doubled my money and blah, 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 blah. And so then they buy 2 more contracts, right? And then it goes deeper red and they go, oh crap. Let me move this further out and let me buy some more contracts. And, and then that way, if we just come to here, like I would have made money and, whatever, I'll be good, blah, 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 blah. And then price does this and they go, well, shoot, let me move this further out and I'll grab some more contracts here. And then I just need price to come, just barely to there, and I'll make money. And then eventually they blow their account on one trade because they didn't accept their risk. They didn't accept that if probabilities go against them, they just need to let it hit their stop loss and then look for the next trade, right? So this is going to be a pretty dumb question for most people in this class, but if we're red on a trade, right, and we do this, then that means in order to do this when we're red on a trade, right, to move our stop loss further back, then that means when we're green on a trade, we need to move our take profit further away. Are you guys moving your take profit further away when you're green on a trade? Most people, or the average retail trader, again, is trailing their stop loss closer because they don't want to take a loss, right? They're like, oh, at least if it hits here, like, at least I made a little bit of money, right? Nobody, or very rarely, like, if we get like a sudden, like, big candle, like, swooping down, like, people might go, oh, let me get greedy and try to get more, right? And that'll end up biting you in the butt as well. Because we've identified this is a good place to close the trade. But if we look left, like, we don't have, levels here that are justifying moving our take profit down to here, right? I hope this is making sense to everybody. We need to plan our trades based on key levels on the chart. We don't do see green, take green. We don't do see profit, take profit. We don't do see red, average down. We don't do see red, move your stop loss further out. You plan your trade, and if it hits your stop loss, you take it on the chin, and then you look for the next setup, and you play your levels. You play to your advantage. You accept that there's going to be, whatever it is, 40 to 30% of the time, probabilities are going to go against you. It doesn't matter how good the setup was. 30 to 40% of the time, probabilities are going to go against you. We don't average down. We don't move our stop loss. We don't blow our accounts. Okay. And when we're green, we don't start moving our stop loss. Otherwise, the chances of us making it all the way to here is almost nothing, right? The only time you're going to make it all the way down here, if you move your stop loss, like even here, we were green for a bit, and then we came back and went red, and then we went further red. And actually, even right here, we were even green for a second here, and then went back further red, green again, back to red, and then boom, right? Or even like here, we gap down. And if at this point, like we moved all the way down to here, and you moved your stop loss down here, just like trying to protect a little bit, you would have got stopped out, and then boom, 2 days later, it hits your take profit level, right? You can't do that. Or you can do it, but you shouldn't do it. If you want to be one of my students, you should not be doing that. Like completely unacceptable. We only let either our stop loss get hit or our take profit get hit. Okay. We're going to go focus again back on volume profile. We've drawn our daily levels. Our yearly levels. And again, for our yearly levels, we use PVP indicator on 12 months, right? And 1 day candlesticks. All of that is important. So PVP, 12 month, value area volume 68, row size 100, daily candlesticks. The reason for that is if I go to a lower time frame, I'm not going to be able to go too low, but let's just say I go to 6 hours. You'll notice it's not very significant right now, but my 2024 value area low shifted down very slightly. It might be hard to see even on YouTube, but it shifted up, right, on a different time frame. So there is a reason that we draw them on the time frames that I'm talking about. Our POC shifted up as well, right? And then the more drastic the time frame is, the more the shift will be. I guess in this case it's not, but you can see the POC's off. The value area low is shifted a little bit, but sometimes it can be very drastic where the levels are drastically different if you don't use the correct time frame. From here, we're going to go to 1 month. And we're going to change our time frame to 65 minutes. And I'll just share with everybody, if you don't have 65 minutes on your chart, you go up here to add custom interval and you type in minutes and then type 65. The reason that we do 65 minutes, or actually, I'm sorry, it's not 65 minutes. For our monthly levels, it's going to be 4 hours. And right now, I am cooking. Give me just a second, guys. I'm going to turn on my AC. I'll be right back. Okay, sorry about that, everybody. It was very warm all of a sudden in my room. And so on our monthlies, we're going to be looking at so I'll always chart my previous month. And again, the same thing I was telling you guys, I don't have monthly templates saved. If you don't have, or to create a template, I didn't talk about this, but you right click on your level and you would go to template and then save as. But so first you would change it to the color you want. And then under your text, you would put, I believe that's May. Yeah, so this is May. And then you would right click it and go to template and click save as, and then you'll type in the name of the template. Just so you know, that's how I'm quickly doing the levels, is I have templates saved for, my previous day and previous week, right? And so, again, the monthlies you're just doing really once a month. So I don't have templates for all 12 months. I just manually change this part. Right. So again, once a month, we're going to get our monthly levels. Just like I talked about on yearly, right now, prices outside of the May value areas, right? Right now, so again, I'm just going to reinforce what we've been talking about. So here we're in value, right? And then right now we broke out, but they confirmed that they're content up here by giving us a retest of this value area high and bouncing back outside, right? So right now we're out of value and exploring higher and trying to create value up here, okay? So with that said, I want to make sure I have whatever time frame this is charted. So with that said, this is February. And so I want to make sure I have my February value areas. And so from here, we're going to go, oops, what am I doing? So this will be Feb. Okay. And right now it looks like we're accepting price inside of the February value area, because, and actually I just noticed something very interesting. We were talking about the 80% rule, right? Let me turn off this just to make this cleaner. I think everybody would agree, again, without me drawing a range to see how many days we've been outside, but this is more than 45 minutes outside of February's value area, right? And if we drop down to a lower time frame, at least this is what I would do. We're looking for price to come back inside. I'm going to have to zoom in quite a bit more for you guys. And spend at least 15 minutes inside. Whoa, what happened? At least 15 minutes inside, and then retest our value area low. And then there's an 80% chance that they're going to do this. Whoa. Right? And we would be targeting the high to close it. I will say in this case where our POC and our February value are high or so close, it might not be a terrible idea to just target the POC as the area to close your trade. Okay. So anyway, we would obviously have to draw, and actually this is a good time for me to just do this while we're here. So when I talk about planning your trades, and some people feel like they don't have time to plan their trades, we're looking for a minimum of 3 5-minute candles to close above this value area low in order for us to take the trade. And in this case, it took them an hour and 50 minutes. Do you guys think you could plan out a trade in an hour and 50 minutes? Or even better, as price is approaching this level, could you go, oh, like even when price is here, like, oh, wow, there's a chance that we might break through the February value area low, and I might be able to get a call off of the February value area low and play it all the way to the February value area high, right? And so when price is here, and then let's just do this just for argument's sake. In this instance, you now have 2 hours and 40 minutes to plan a trade, right? And so once you start thinking about this, you grab your long position tool. You know that you want to enter on the retest of our February value area low. And actually, I'm going to hit replay again to try to not make myself a liar. We're going to try to identify a key level to use for your stop loss based on the trade that we're looking at. And we'll see if we get stopped out or not based on that information. Again, if we do, it doesn't matter because we're just playing probabilities, right? And then immediately, even without zooming in, my eyes kind of go right there, right? I don't know that that's definitively where I want to make sure my stop loss is below, but this is the first, this wick of this candle just grabbed my eye right away, like this right here, right? So let's zoom in more and get a better picture. Let's go to a higher time frame because we're looking to catch a really big move. So we want to figure out like where the key level is, or where a key support resistance level is. I think we have one right there. Let me draw a line and we'll see. Actually, let me erase this line. I think I prefer this one, but if you argued that I'm wrong, I wouldn't disagree with you, right? Like this isn't terrible, but I just think we have more points so this is resistance. We broke through. It tried to act as support here. Or actually, no, it gapped down below it, and then we broke back through. And then right when we broke through, it bounced off of it again, right? I'm going to delete this just so it's cleaner. And then here kind of acted as support again. Here we broke through resistance, resistance, broke back through, had to gap below it, resistance, and then just kind of chopped through it. Here it's resistance. It did wick through and then sold back off. This candle obviously like broke through it pretty cleanly. But anyway, here we came back over it. It acted as support again. So for me, I think this is a pretty safe level to say stop loss somewhere below that. You can even argue at this point, like it might be a good idea to put your stop loss below the May POC, as long as our risk to reward agrees, right? As long as we're making at least 2-to-1 risk to reward, we could put our stop loss below the May POC. Or, like this is a little bit nicer because we're getting 3-to-1. Let's try 3-to-1 and just kind of see, like, would we get stopped out on this trade or not, based on what happens. And then let's extend this out. And then hopefully you guys are kind of understanding how I figure out, like, where to put my stop loss based on, candlesticks, based on the information that we have. Let's turn off the, look at that. Pfft, golden. And this was definitely a stop hunt, right? Like the wick on this candle, and we would still be in the trade, right? Just barely, but we're still in the trade. Again, I didn't memorize any of the, candles when I hit the replay button. And again, if it did stop us out, probabilities such as life. And again, we also notice, or actually, no, this wouldn't have been a stop out because we're getting in. Well, actually, let me see. 1, 2, 3. Yeah, so no, it would have, sorry, I'm confusing myself. We would have been getting in the trade here, right? And they would have gone red to green to red to green to red, back to green, bounced right off of our entry, green again, back to red, even more green, back to red, green, red, green, red, almost stopped us out, and then gapped up, and like went more and more green. Anyway, the key is if at any point I trail my stop loss, I would get stopped out, right? Even now we're back to break even. This might not be very promising for some people, but, it just is what it is. And we have to trade the setup, right? And in this instance, we're risking 5 points on SPY to make 15, which is awesome if you think about it. If you catch a move like this, like your account is going to rocket, right? So anyway, we don't know what happens from here, but there's an 80% chance that they're going to go to the February value area high. Hopefully they do it after there's a sell-off because I'm in puts over the weekend. So, yeah, there's that. Let me just delete some stuff. Anyway, I couldn't ignore covering this while it's showing up again here. As we're just doing like our general charting. So again, just to recap really quickly, PVP indicator, period is 1 month, value area volume 68, row size 100, under style, check value area high, value area low, POC. And then from here, we want to be on a 4-hour chart. Once we've done this, we now go down to that 65-minute chart that I was talking about earlier. On our PVP indicator, we're going to go to 1 week. Everything else stays the same. And what we're actually going to do is we chart our previous week levels. So in this case, previous week value area high, previous week value area low, previous week POC. And I know I haven't talked about what a POC is yet. We will. We'll get into that. Okay. Um, so with this, I drew this on last week's profile because I wanted to show you basically once a week. All you have to do is you grab your previous week value area high and you move it to the new week. Right. So basically, after the market closes on Friday, sometime from when the market closes to before the market opens Monday morning, you're going to want to grab your weekly levels and drag them forward. Okay. And then lastly, we'll grab our POC and drag it forward. From here, we're going to drop down to a 30-minute chart. And this is the time frame that I like the most for charting. But I also want to point out here, notice that with my PVP turned on 1 week, when I went to a 1 week chart, my value area high shifted down, right? When I went to the 30-minute chart, and my value area low shifted down. So if I was drawing this on the wrong time frame, my levels would be off. And also, a couple of things I've just realized that I forgot to mention. For one, when we're charting SPY or any stock, you're going to be on regular trading hours. You turn off extended trading hours. If you're trading futures or something like Bitcoin that's open 24 hours a day, then you would chart it with extended trading hours turned on. And what I'm teaching applies to everything. So this applies to stocks. It applies to futures. It applies to cryptocurrency. And it will apply to Forex. So really anything that you can trade with volume profile. From here, we're going to turn off this PVP indicator and we turn on session volume profile. And under the settings, it's going to be the same row size 100, value area 68. Under style, check value area high, value area low, POC. I'm just going to change the colors really quick. And what we're going to do is we'll just act like we're charting Thursday to trade Friday. Same thing. We do our value area high. We do our POC. And we do our value area low. And this actually works out very well. I get to teach you guys a bunch of stuff all at one time. So the first thing is if we look, it might be a little bit hard to see, but my value area low is right here, like literally almost exactly the same level. Let me zoom in like really close so you guys can see it's what? It's literally 1 penny below my February value area low. So when something like this happens, what I do is instead of dragging down this previous day here, because normally like after the market closes on Friday, I would normally grab my Thursday level and bring it down, right? But in this case, these levels are overlapping or off by 1 cent. And so I would just double click this. I put a little dash and put previous day value area low. And then I would just delete this line until basically Monday closes, and then I would have to put a new line. The second thing, well, we can quickly move down our previous day value area high to here. But something's happened here where we don't want to move our previous day POC. And I'll cover that in just a second, but let's just quickly draw our previous day POC for Monday's trading day, or whoops, that's previous week. Okay. And so the reason that I'm not bringing this one down is I always hate explaining this. um, let me hit replay. Let's go to here. Okay. So if I was drawing my POC for this day, right? It actually lines right up with the previous week POC. Basically, this POC, the POC stands for point of control. The point of control is going to be our the area where the largest volume was traded on any given time frame, right? So in this case, we're looking at daily time frame on a 30-minute chart, right? And so for our daily volume, the largest volume was at 692 cents. And while this is being formed, obviously the only way it can be formed is for price to go through that level, right? So price is going to touch this level over and over and over again. Otherwise, there wouldn't be volume traded here. So while the profile is being formed, which in this case is, from this candle to this candle, price can touch this level as much as it wants, and it would still be considered a virgin level, right? And so really quickly, I'm going to change this to previous day. And then the V in POC stands for virgin point of control, meaning that it hasn't been touched after it was formed. If I turn on extended trading hours, and I'm going to have to shift forward to the next day. Actually, let me go back one more. Okay. So right now, actually, let me turn off the session volume profile just to make this cleaner to see. So this is the level that we're looking at, I think. I'm confusing myself right now. Bear with me 1 second, sorry. Session volume profile. Oh, I'm confusing myself because this is the weekly level, but actually let me just do this. And then we'll redo the weekly level after, so it's not confusing. So extended trading hours. So this was formed here, right? And like I said, this level can be touched while it's being formed. And that includes after hours and pre-market, right? So all of this, it's fine if we're touching this level. It's still a virgin. Anyway, whatever. So all the way through here, it's fine if it's being touched. As soon as the market opens, if we go to 5 minutes, right, and we start going forward, we still have a virgin level, right? And then right now, it just got touched. This now becomes a regular POC. Okay? So while it's being formed, the day it's being formed, and then after hours and pre-market, it can be touched as many times as it wants. It doesn't matter. It's still a virgin. After the market opens the next day, or if we're doing a weekly level, because weekly can have virgin POCs as well. So it would be after it opens the next week, or monthly has virgin POCs as well, and it would be after it opens the next month. Once we're on a new day or a new week or a new month, if it touches that level, then it would invalidate the virgin part, and it becomes just a regular POC. The distinction, basically the importance of this is a virgin POC is about 10 times stronger than a regular POC. And so let me turn regular training hours back on. I need to go to 65 minutes really quick and fix my weekly POC. Okay. Into there. So right now, the reason that we didn't move this previous day POC is because it's still a virgin POC and it's worth having on the chart. The reason being is virgin POCs, like I said, they're about 10 times stronger than a regular POC. But if we look, we're on 30 minutes. Let's turn on session volume profile. So here we have a POC, a virgin POC. So it was formed, dum 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 dum. We gapped over it, and we have not come back and touched it yet, right? You can see this one here. It was a virgin POC. Oh no, actually, sorry. Right after it was formed, it was touched. Right here, I missed that, but it looked like it didn't happen until here, but it was right there. So we'll delete that. So this here and this here and this here were all virgin POCs, right? So this one was formed, price went away from it. We've talked about this, but like when you have a strong level, price tends to gap through it. If we gap through it, this still remains a virgin POC. We didn't touch it. We came all the way up and took out this virgin POC up here. Well, actually, first, I'm sorry, this massive selling candle, which I think is probably a misprint, but I'm not positive, so we'll just pretend that it's real. This massive candle here took out this virgin POC and this virgin POC in one foul swoop and then bounced. And then the very next day, this one took out this virgin POC here. And so what I'm trying to show is this might be well, no, it's not. Basically, when you have more POCs like to the downside, so in this instance here where we drew 3 of them, right? We have 2 POCs or 2 virgin POCs below and only 1 above. And they came and took out the 2 below and then went and hit the 1 above. So basically, like if you have, let's just say 2 virgin POCs on the bottom and 1 virgin POC on the top, price is more likely to go down. If we have 5 virgin POCs on the top and 2 on the bottom, price is more likely to get pulled up because the POCs act as a magnet to price. Okay. So you want to keep at least the virgin POCs on your chart for dailies or whatever, because sometimes you'll have like 6 below and those will start acting as a magnet to price and pulling it down and taking out those levels before they go upside. Okay. It's not like a steadfast rule, but it's a general rule of thumb that you can use when you're looking at your chart and you're trying to do your analysis and figure out, like, is price going up or down? Okay. With that said, I will also say it's never good to go into a trading day with some kind of bias. So when I look at charts, I try to figure out what direction we're going, but I don't ever have biased
when the market opens, I see how we start reacting to levels and I trade based on that. Okay. But it's not bad to look at the market with, like asking yourself like, oh, where is price trying to go from here? Okay. Um, so anyway, we would leave this Virgin POC up here on the top. Because as of right now, we do have a Virgin POC on the bottom here. And we might have to go way further back. There is one way down here. And I think we have one here as well. Have to zoom in and really look at it. This is Thursday, Friday. Yeah, so there's one here and one here. But so they may want to be revisiting these. Just a heads up. There's also one down here. So we have 3 right here. 3 Virgin POCs. I'm sure you could go lower and find more. It's not always going to be, like price is not always going to get pulled to it. But again, good rule of thumb, if you have more on the downside than you do on the upside, there's a good chance they'll act as a magnet. More on the upside than the downside, good chance those ones at the top will act as a magnet. Okay. So this is how I find all of my levels, for the most part. My previous year, previous month, previous week, previous day, and those are the levels that I trade off of. Let's see if we can find an example of a trade. I know this day on SPY was not like great as far as levels were concerned. So here's one here. I want to make sure that I'm correct when I show this, because again, not that the trade worked. I don't care about that. What I care about is, did my level get hit, right? So like I talked about on SPY, we want like 25 cents on each side. So 5.99.29, we would go to 5.99.04, I believe, would give us like our 25-cent range. Something like this, right? I didn't try to be perfect on the top side, but more precise on the bottom. This is 25 cents on each side. So what I'm generally looking for, I'm on a 5-minute chart. I talked about this. I want to see price either break below a level and have at least 3 5-minute candles close below, retest, and then from there I would enter short, right? Or I want to see price break through a level, have 3 5-minute candles or more, retest, and then enter calls. So in this case, I actually don't know that I would have taken this trade, but let's just take a look at it and see. Or actually, I mean, I know right off the bat, I don't love this, and I'll explain why. And then I'll try to find a better example. But so when I'm looking for price breaking through a level, what I actually want to see, so like here you can see we broke through and then we closed above, right? And then the next candle, we wicked all the way back down to the level and then bounced. And then our next candle wicked down, but we didn't touch the level. And then it ended up bouncing. This would have been the candle that we would take the retest on. And it would have been a a fake out, like it would have gone against us and stopped us out, right? If we were taking calls here. The reason that I don't like this and the reason that I don't particularly like this is when we broke through, our second 5-minute candle touched the level. Same thing here. When we broke through, our second 5-minute candle actually went right through the level and then came back below. What I'm looking for is, I'm just going to draw like fake candles. Let's say this is the level we're breaking through, right? This is my first candle. I want my second candle to look something like this. Or I mean, the size doesn't matter, but I don't want it to touch this level. My third candle, I mean, it could be anywhere as long as I'm not touching this level. And then this right here gives me 1, 2, 3. So 15 minutes of candles closing above this level. It's not always going to be 15 minutes, so sometimes we're going to get more. But as soon as they come down and retest this is where I would enter into calls, right? But I want to see a clean, strong break. And then every candle after that closing or opening and closing above my level without touching it again. If, like, let's say we break through and my second candle is clean, it opens and closes above, but then the third candle comes down and touches it and then bounces, it kind of invalidates what I'm looking for. It still might work out in your favor, but you really want to see a clean break where price does this, we stay above, we retest, and then we go. Hopefully, if you're imagining, let's just say, candlesticks, right? People might not recognize what this is right away. I mean, this is a little bit extreme, but something like this. But I hope you do recognize what this is. And actually, I guess I feel like it's not drawn ideally, but it is what it is. So a lot of people like to trade patterns, right? I don't trade patterns. I recognize when patterns are happening. I recognize more specifically when patterns are happening that line up with my levels and that are giving confluence to the trade that I'm looking for, right? And so when price does this and breaks through a key level, right, and then spends at least 3 5-minute candles, so at least 15 minutes above my level, and then retests it and then goes, this is actually what retail would consider to be. I'm gonna have to redraw this line actually just to make this work. So if we basically draw the same line and go something like this, hopefully you guys are seeing what this is. This would be a bull flag, right? And we put our candlesticks in here. And there's a few different ways to trade bull flags. The way that I was taught was by my mentor, who was a market maker. And the way that he taught makes the most sense to me. So that's what I go with. A lot of retail traders, they will wait for a breakout of this level. So a breakout of the top of the flag before they enter a trade. So basically, when this candle here went through the top of the flag, they would enter calls. Your more conservative retail traders will wait until price crosses the top of the last touch of the top of the flag to enter into their trade. And our really conservative retail traders will wait until the top of the flag is broken to enter into trades. any one of these, in my opinion, you're getting into the trade late. What my mentor taught me is when we break through our key level and we get those 3 5-minute candles closing above cleanly, right? So we're not retesting this level. When we finally do retest the level, this is where you enter calls, or this is where you enter long if you're trading futures. And then you're getting an extra, what is it? Like, you're getting an extra 50 cents of this move that the rest of retail is missing out on, which then gives you basically 1.5 points, whereas retail would be getting, like 1.14 at best. If they're the ones that are less riskier, they're getting 1 point. And if they're getting in at the top of the flag, they're getting under a point, right? So this gives you the bigger part of the move. And also, a key thing is if we lose this level, right? If we lose the previous week value area low, it's telling me that there's a good chance that the participants in the market are not accepting value above this level, right? And so my trade could be invalidated pretty quickly, which just basically means I can stop out of that trade quickly without risking too much money, or I can also draw fibs. So at the very beginning of the video, we talked about measured moves, and this is one of the measured moves that we can do. We grab our fib retracement tool. You go from the top of the flagpole to the bottom of the flagpole. And ideally, if I had drawn this better, this golden level here would line up with where we would have entered the trade. A lot of times you'll notice, like if you draw your fibs on a bull flag that basically broke through a key level and then retested it, the what's called the golden pocket, which is your 0.682 to 0.618 level, will line right up with that key level that you want to enter the trade off of. Golden pocket is always a good area to initiate a trade. Okay. Anyway, my drawing's not perfect, so it's not lining up. 100% a flag is invalidated when price goes below the 50% retracement or the 50% fib. Okay. And this was measured pretty well by me, but when we take a trade off of a bull flag or a bear flag, our price target is going to be the 272 level. And you'll see a lot of times like that will line up with like the next key level on the chart. And if we have a trend day, then they'll go to the 618 level and then eventually the 786 level, 272, so on and so forth. Okay. I'll pull this up really quick. If you want to use the same fib levels as me, you can either grab a screenshot right now really quick, or you can come back later and pause this and take a screenshot of this. Okay. So again, my trade would be invalidated if we go below the 50% fib. I might fudge this just to make this actually line up like it should. This is the trade I'm interested in taking, right? I draw my long position entering here, and I want my stop loss to be a little bit below my 50% fib and my take profit to be at the 272 level. And you can see in this case, I'm risking $1 to make 3. I can take this trade, and I should take this trade every day, every single time, anytime I see this happen, right? You might want to give them a little bit of room below your 50% retracement. But again, if price makes it down here, more likely than not, they just invalidate our trade and they're going to stop us out. Okay. Hopefully all of this is making a lot of sense to everybody. And with this said, this is just a general rule of thumb that I'm going to give you guys, but it's not something that's concrete or set in stone. But generally, when you're at value area low, you want to be thinking net long, right? Like we want to be initiating calls or getting into a long position if you're trading futures. When we're at our value area highs, we want to be thinking net short, getting into puts or getting into shorts if we're trading futures. Okay. Again, not 100% rule that like is going to work every single time, but when you're a newer trader, it's very helpful to be thinking calls when you're at value area low and thinking puts when you're at value area high. Okay. I'm going to take a quick break really quick. I'm just going to take a sip of water, everybody. My mouth's getting really dry. We're like 2 hours in. Should be able to wrap up, I think, anywhere from an hour to 2 hours from now. So actually, now that I think about it, it's like kind of a midpoint. I think I'm actually just going to take a break. Probably like 5 minutes, just stretch my legs. I'm going to go get some more water, and then we'll hop right back into this. And it's actually like a good point to stop because we've covered like our bull flags, bear flags. I mean, I didn't draw the bear flag, but obviously that would be breaking below a level, 3 5-minute candles or more, retesting, enter short. Okay. With that said, I probably won't even be gone for 5 minutes, but right now, you know, if you need to get up and use the restroom, grab some water yourself, go do all of that. And I will be right back.
All right, everybody. I'm back. Sorry, let me go back to the live screen here. I'm going to delete this fake bear flag I made really quick. And so, based on what I just talked about, I don't feel like this is an ideal area to enter a trade. And with that said, I'm still going to cover it just because we came through, broke back down through this level, had 3 5-minute candles close below, retested here, and you would enter short. And generally when I trade like this, I'm going to go from one level to the next unless I have some kind of confluence that's saying I'm going to get a bigger move or whatever, like the 80% roll, so on and so forth. So in this case, you throw your 25-cent level around your upper level. We said 99.04. Whatever, that's going to have to be close enough. And then same thing with my level on the bottom, 25 cents above. So that puts it at, and actually, now that I'm thinking about it, I think 25 cents is probably too big for SPY. I don't really trade SPY, so I'm, let me see, if I go to 09, that would be 20 cents. So 14 would put me right at like 15 cents. I think that's probably better, 15 cents on each side. And then if we do the same thing on the bottom here, we're going from 53, so up to 18. Again, I don't care if up to 68. I don't care if the trade works or not. Okay, it won't let me get 68, but 67, whatever. So if I was entering this trade, I'm actually kind of disappointed that it did work because I would rather it didn't work because I have this candle wicking through. But again, if I was doing this here, where if I initiated a long here and then figured out, like where to put my stop loss or whatever, it wouldn't have worked out in my favor because, again, most likely because we tapped the previous week value low after we broke through it, right? We want to see a clean break above, candles opening and closing without retesting that level until we have at least 3 5-minute candles closing above. What's up, my brother Robert? So anyway, if we had tried to the upside, this wouldn't have worked out. And then in this case, to the downside, it did work, even though we did wick back through the level. We really want to see a cleaner break than that. But again, I'm just going to show it just for the sake of showing it. You would figure out where you're entering. Oops, wrong one. You would figure out where you're entering the trade once you break below that level. And then figure out where your take profit is. And then you're going to look, oops, it's a little bit lower. You're going to look left and kind of figure out like where do you want your stop loss to be based on the information that you have. And of course, my eye goes right there, right? This is support. When we're below it, it acted as resistance. So as long as I can put my stop loss a little bit above that, I would be able to take this trade. In this case, I can't unless I'm willing to do basically right at that level, right? Now, if I'm being frank with you guys, I would probably do something like this and take the trade. Me personally, right? I don't know that that's the best advice, but we're close enough to 1 to 2. The thing is just if they come back to that resistance level and show any signs of going through it, I'm going to have to stop out of the trade. And the issue with that is they might, basically just do a little liquidity hunt and then go, right? But I would have to still, take the stop on it, take the L,
if I did take this setup based on my risk to reward ratio, right? In this case, it would have worked out. I never went red, really. I mean, just barely for like a split second. But it hit our level and then rejected and went all the way back, all the way down to our take profit level, right? Let's see. I feel like now I have like extra lines on my chart that don't belong there. Yeah, that one. And just while it's on the forefront of my mind, I'll also say that probably like once every 3 months, you want to right click on your chart and go down to this one that says remove however many drawings and just erase everything. And then start with a clean chart, because you're going to end up with levels like all over the place, and you're going to have levels that are not being respected anymore, and just a really messy chart. Okay. So, yeah, like roughly once every 3 months, wipe the chart clean, start fresh. Okay. Let's see. This part's always hard, but let me see if we can find an 80% rule that worked out. Probably here. Well, actually, no. Sorry, I forgot I have to look at the previous day, not the current profile. And like I said, they happen about what's it called? They happen about once or twice a week. And with how volatile the market's been with Trump, they haven't been happening once or twice a week, because we just seem to have only uptrend. In order to find an 80% rule, you need a pullback, right? Let's do this, because it's probably a fake out, and it would fall into the 20% of time that doesn't work. But let's just see. Basically, talked about this at the beginning of the video. I have no issue showing times where things don't work. And the reason being is if we act like our setups are always going to work, we're just fooling ourselves, and we're not doing ourselves any favors. Price or trades are going to go against you, and we're just playing probabilities. And I know I've already said that, and you'll probably hear me say it more times, but really, like, I'm repeating it to reinforce what I'm saying, basically. Let me turn off session volume profile. Let's hit the replay tool. I don't remember exactly where I need to be, but so we're looking at Tuesday's value area for Wednesday. So, I mean, it's not bad. Let me go there. Okay. So from here, we're looking at it. We're looking to take the setup on 5 minutes, right? And so again, we're looking at Tuesday's value area high to value area low for our setup. And we're looking for 45 minutes outside. I don't know if we have 45 minutes outside. Even if we don't, we can pretend we do. We got 30 minutes, right? So right now, we don't have a setup here. And then if we did have 45 minutes outside, this is what you want to see, where we break through the level. It's clean. We don't come back and retest it. The next candle opens and closes cleanly below this level without touching it again. But our third candle does tap it, right? But let's just pretend, like the setup was there and we tried taking a short here or tried getting into puts. This would have ended up going against us, right? So again, I'm not going to like waste my time trying to figure out a stop loss for a trade that we know is not going to work. But this would have been the trade we were looking for. But then again, like I said, frankly, we didn't even have the 45 minutes outside. But and then also we touched, or we got our retest on our third candle instead of our fourth candle. And I'm going to reemphasize this, fourth or more, right? It could have been fifth, sixth, seventh, eighth. It could have been the 15th candle. It doesn't matter. But the key is that we need at least 3 candles opening and closing below our level or opening and closing above our level before we consider re-entering the trade, right? Or not re-entering, before we consider entering the trade. And we talked about this kind of towards the beginning of the class. The reason that we're looking for those 3 5-minute candles below is to confirm that the market participants are happy below this level. But basically, as soon as they tapped right there, it was saying they're actually not happy. And then they came back above and started trying to find value above this level, right? They end up slicing back down, back above, coming back below. Seems like the participants of the market are, pretty indecisive here on where they want to be, right? Hopefully that makes sense to everybody. And sorry, this is going to be kind of random, but it just popped into my head, and it's important that I share it with you guys. Most people know this. Some people might not know this, but when you're dealing with trading, like people will be like, oh, there's more sellers than buyers, or there's more buyers than sellers. So like some people, when they see the market doing this, will say, oh, right now we have more buyers. Or when they see the market doing this, they're going to say, oh, we have more sellers. The stock market is a 1-for-1 transaction, meaning if I'm buying, I have to have somebody willing to sell to me, right? So if I'm here buying, I need somebody over here selling. If I'm over here selling, I need somebody over here buying. I can't buy without a product to buy, right? So like during COVID, when toilet paper was the rarest thing on earth, and you would walk into a store, you couldn't walk in and be like, oh, empty shelves, but I want toilet paper. And then toilet paper magically appears. No, that doesn't happen. You walk into the store where the shelves are empty and you go, I want toilet paper. And you're going to leave with empty hands because there's no toilet paper available for you to buy. So if I want a share of SPY and nobody's selling a share of SPY, the shelves are empty in the supermarket, I'm not going to be able to buy a share of SPY. And vice versa. If I want to if I want to sell a share of SPY, if there's not a buyer, I won't be able to sell it, right? So for every single trade, there always has to be a buyer and there always has to be a seller. Okay. And you guys have probably seen that when you try to trade something that's less liquid than SPY. Like you put in like a limit order at the bid or whatever, and it just sits there and sits there and sits there and never gets filled, and then you end up moving the price down so that they finally fill you. Again, we always have to have somebody willing to sell to us if we're trying to buy, and somebody to buy from somebody to buy it if we're trying to sell. Okay. I'm still trying to find an 80% rule setup, and I think I just found one. It's going to be a small one, unfortunately, but it is what it is. Let's draw our levels really quick. Actually, I just realized, let me circle this so I don't forget. But I think I just left extra previous day levels on the chart. No, I didn't. I guess I deleted them. Oh, this is... I think I'm looking at the same day. No, I'm not. Okay. It's kind of funny that I'm right in the same area, but just a day ahead. Oh, and I'm on 5 minutes. I need to switch to 30 minutes. I'm being a total noob right now, guys. Okay, we're looking at this here. Technically, we don't need the POC for this because we're just looking for value area high to value area low or value area low to value area high, right? Let's hit the replay tool, turn off our session volume profile, and then go to a 5-minute chart. I should add, a lot of people ask like, oh, what time frame should I trade on? And it doesn't matter. Like, did I just literally look at the same exact setup? I don't think I did. I like to trade on 5 minutes because of the simple fact that most of my trades, I'm looking for, breaking above a level and having 3 5-minute candles close, or spending 15 minutes above that level. The easiest way for me to count 15 minutes is 3 5-minute candles. I guess I could do one 15-minute candle, but the issue with one 15-minute candle is if they came up and then back below and then back up, I wouldn't be able to see it on that 15-minute candle, right? Whereas on my 5-minute candles, if we break above and then the next candle touches it, I would be able to see that very clearly, right? And then I guess the next easier way to do it would be 1-minute candles where you could count 15 of them. Or I guess 3 minutes would be 5, I think. I'm terrible at math. I don't. But so anyway, for me, the simplest way to do it is to count, just count my 3 5-minute candles, closing, either above my level if I'm breaking through or below my level if I'm breaking below. It looks like, so this is my previous day. Yeah, so they didn't give me a clean entry, unfortunately. We spent 45 minutes or more below, right? But then we wicked way up, closed back below, wicked back up, closed back below, broke through, tested the level again, whatever. We never got our clean 3 5-minute candles, and then a retest and then go. And then, like I said, sometimes without the setup being there, it still works out. But we're not looking to take the sloppy setups. We want to take nice, clean trades where, the odds are in our favor. I'm going to try to look one more time for 80% rule. And really seriously, with all of the news with Trump, it just has been very difficult to find 80% rules. Let's see if this one here works. And again, I don't care if the trade works. What I care about is the setup there. This one, it might not be. But let's just check. Yeah, I don't think we spent 45 minutes below. And even if we did, we never got a retest, right? So I'm just going to keep looking. And delete this. We might have spent 45 minutes below. Might have spent 45 minutes below this one as well. Might have spent 45 minutes above. So there's quite a few here we can check. Let's do this first below. Wait, no. This one below. Sorry. I think on this one we can do above and below at the same time, if I'm right. No, we can't. Just below. Let me go here. And let's go down to 5 minutes and just see how this looks. Okay, we'll just show this, even though it's not what we were looking for. I think we're looking... So this is Thursday to trade on Friday, right? We came below... came up, had our 3 5-minute candles, retested. This is, so again, we didn't spend more than 45 minutes below, but this would be, so we're not looking, basically my point is we're not looking for the full move from low to high. We're just looking for a move, right? And in this case, it wouldn't have worked out. But this would be our retest, and you figure out, where you want to be stopped out. You would target the next level above. And in this case, we get our 3. This is a nice clean break, so the setup is good. This is our retest here, and then you enter calls, and you'd be targeting the next level above, which in this case is the May VPOC, and they didn't give it to us. They would have stopped us out. And this looks like news, but it doesn't matter. They would have stopped us out before, depending on where. Even if we go like to 2 to 1, we would have got stopped out on this trade, right? And again, like I said, I don't have an issue with showing setups that don't work, because that's going to happen to us. So just being frank here, I'm not going to give this too much time. If we don't find one, you guys are just going to have to take my word that this does work 80% of the time. But there is a chance that we don't get to see it. Let's see. I probably should have looked for one of these before I went live, but it is what it is. We'll check this one, and then we'll check this one. And if we don't see it within those two, then we'll just move on and continue with the class. Okay. So we're going to go to here, go to 5 minutes. And let me turn off session volume profile so we can see a little bit better. I don't think we spent 45 minutes outside, or maybe we did actually. Let's see. 35 minutes. But it actually would have worked. So let's just pretend we spent 45 minutes outside for the sake of argument. We came down. This obviously is not an entry because we didn't spend 3 5-minute candles below. Then here we finally do. It's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Retest. You enter short or enter puts, and you would have hit your profit target there. One side to the other. We're just going to have to pretend they gave us 45 minutes outside. Okay. That's what we're looking for. Personally, I would be afraid to take this probably because of the fact that we had already gone from one side to the other without the retest. But in this case, it did work out. Okay. So like I said, I'm done trying to find that because, actually, frankly, what you guys should do is just go back and retest it or back test it yourself and look for the setup and then, see that it works for yourself. I think from here we can pivot a little bit and look at something other than volume profile. I will say before I move past volume profile, whoa, what just happened? So this book here is called Volume Profile. It's written by Trader Dale. Um, it's literally one of my favorite trading books ever. I'm posting the link right now. And also, you can get this book for free. Um, so, oh, what was I doing? Sorry. If you like physical copies of books, I gave the link to Amazon where you can buy it. If you don't mind a digital copy, I prefer physical copies, so I buy physical copies of all of my books. But you can go to Google and just type in volume profile Trader Dale. You'll find his website, traderdale.com. And I'll also just link this really quickly in the chat. This part I don't like is that like it has this kind of, it looks kind of spammy. I get it. But here you can literally just put in your name and your email address and download the book 100% for free. It is only like a $10 book, but free is better to some people. Again, personally, I don't like to read off of like off of digital, any kind of digital media like a tablet or PC or phone. I would rather read on paper, but that's, everybody has their own personal preferences. If you don't mind reading digital, again, type in your name, put in your email address, click instant download. You can download it for free. He will send you emails, but they're actually like good, valuable emails where he'll share like trades that he's looking for, or trades that he's watching or whatever. And you can basically follow the trades that he shares, and they have a very, very high win rate. So it's worth, like getting the emails. But if you don't want the emails, go in, put your name in, put your email address in, download it, and then unsubscribe from his emails, and he won't bother you anymore. But Trader Dale is actually a very genuinely nice person. He's approachable. You can email him. He'll reply to you. And it's actually him replying to you. It's not some random stranger that works for him. And he's actually like a super cool guy. But anyway, with that said, I'm going to use the digital copy of the book to just kind of go over some really key things about trading, some key things about setups. So far, the only setup we've really talked about is like breaking through a level, retesting it, entering, or breaking below a level, retesting it, entering. And actually, like while we're here looking at this, I see like a nice trade right here where we broke above, had our 3 5-minute candles or more, retested, played up to the next level, right? Anyway, if you go to volume profile, again, obviously read the entire book, but I'm going to skip forward and kind of focus on trading setups. Some of this we've already talked about in this class, but some of it we have not talked about. We're going to start on page 25. And again, if you're reading the book for the first time, read the whole book. But when you get to about page 25 where it says strategy 1 is where you want to start memorizing things. Okay. So we talked about if you don't know market structure, read technical analysis or getting started in technical analysis by Jack D. Swagger, but don't worry about memorizing anything. Just have a good understanding of what he's talking about. With volume profile, you definitely want to start memorizing when you get to page 25. And you want to memorize all the way down to, I don't remember the exact page number, but you'll kind of figure it out like as you're doing it. We're just going to say page 65 because it's somewhere right around there that he covers like the bulk of the information that's really going to apply to trading. The rest of the book is still amazing, but those 20 pages, like you want to memorize for every single day. Like when you sit down to trade, you're going to be wanting to use what you've read on those 20 pages for your trades. I mean, of course, and then what I talked about, like breaking above a level, 3 5-minute candles, retesting, so on and so forth. What Trader Dale does not talk about in this book is when we were looking at levels, like I told you guys what time frames to find them on, what indicator to use. Trader Dale, when he starts talking about volume profile, he talks about his indicators that are specific for NinjaTrader, and then you would have to buy the indicators from him. So basically, we're doing you a massive solid by giving you what indicators to use and what time frame, because it'll save you some money. If you love NinjaTrader, his indicators are rock solid. They are worth having, but you can do just as well with TradingView. Okay. So from page 25, whoa, what happened? Went all the way back to 60 something, 65, right? We're going to go with strategy 1. We already talked about this a little bit, right? Where we were talking about it like in the sense of using it to find, like solid levels to put our stop losses, to protect our stop loss where, like if this is support, we break through and then come back and retest it. This is where you would enter short. We also use that to figure out where to put our stop loss above, because when they come back to it, like they might go a little bit above and then they're going to lose it, right? And most likely sell off. You can also use this as a trading strategy, right? I think this might be a little bit obnoxious, but I think the best example of this I can give you off the top of my head is a trade I took on NQ futures, and it was back, I want to say, on February 17th, somewhere right around that area. And it might seem weird that that's like in my head, considering it was, a few months ago, but we'll just go like to here. The reason that it's so in my head is I've used it so many times for educational purposes that like I just have that trade like stuck in my head. And since it's in my head, it's easy to cover it. I believe it's here. This is February 17th, right? Yes. So actually, let me go backwards more. And actually, maybe I should show this trade after I explain a little bit more. I think that's actually a way better idea, because with this trade, I'm going to be able to show you some stuff regarding the take profit that we have touched on already, but to see it live on a chart would be a little bit more beneficial. So actually, let's go back to the book really quick. And so anyway, support, breakthrough. When we come back to that level that was support, you're going to enter puts, because now you're expecting it to turn into a resistance level, right? So that's one trade setup that Trader Dale talks about. The inverse of that would be resistance, break through, come back, retest, enter, calls. The only thing I don't like with the examples he's giving is, or I guess like in this case, like we wick through it and then came back below, but then once we actually broke it, we didn't touch this level again, right? And that's what we've been talking about. So you want to see those 3 clean 5-minute candles or more. And then when you do get the retest, you would enter calls, right? The second strategy he talks about, and I'm not going to like cover this really in detail because you guys can read the book and get the information there. And it's going to be way better than me trying to like take my understanding of it and teach it to you. But this is called an open drive. And that's where you have sideways price action and then a big move in one direction or the other. So it could be a big move down or a big move up. The level that you get the big move from, if you retest that level, you would enter a position in the same direction, right? And Actually, no, I'm not going to touch on this right now. So anyway, this would be called the open drive, right? This here is called a market open plus open drive. So this would be like the start of, I don't know what session this is. If I read here, it tells you, I think, so Euro/USD pairs, I guess. I don't know. Again, somewhere in here, it probably says what session it is, but it doesn't really matter. We'll just say this is the New York Stock Exchange Open, because most people here are trading options. So like you're on SPY, and when the market opens, if we get a big move, right out of the gate, and they come back to where the market opened from, you would be looking to get into calls based on the trading setup that we're talking about here. So big move from the open, sell off, blah, 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 blah. We're waiting for our retest. Here's our retest. We enter puts, right? So that's the second strategy. Same thing, sideways price action, big move to the upside, come back to that level, retest, enter calls. And I kind of mention this every time I teach this. I love that Trader Dale's showing a setup here where it looks like it probably might have stopped him out, right? And again, the importance of that, just like I say, I'm not afraid of showing you guys examples of trades where they don't work, because we're playing probabilities, and whatever, a good 30-40% of the time it's not going to go in our favor. So we don't only want to show examples where it works. It's also good to show examples where the setup was good and it still ended up going against us, right? So I actually love that we're not having some massive rocket to the upside where we actually start getting a move up and then it starts selling off, and he's showing that information, right? The next strategy is actually very, I don't like this strategy just because it leaves too much to question, right? It leaves too much up to the individual to guess, like, is that the A period to the B period? Is that C? Is that D? So on and so forth. Because you're literally trying to figure out, like, your higher high to your lower high to your higher low, blah, blah, blah. And then the inverse on uptrends. And then you're looking for D to like E or whatever, D to E on your trades. So like here it's A, B equals C, and then you're trading up to D, right? There is a way to do this, and I'll show you guys. Just the win rate is not massive. So if you go to indicators and type in AB equals CD, there's this one here by Patterns Hunter. He also has one that is, oh wait, I guess that's not him. I thought there was one that's private. No, it's not him. Never mind. I thought he did. But anyway, this will reprint. So like, it might have said to sell from here, and then that didn't work out. So then it said to sell from here. So it's kind of hard, like looking at it after the fact, it looks like it's amazing, right? Like every single time it works. But that's not the case. But this will do the math for you, so you're not guessing what's A, what's B, what's C, and then where to enter puts. Obviously, like these look like they played out amazing. It does have a high enough win rate that if you trade it consistently, you'll do well. But yeah, and then you can't go further back to look at this particular indicator. But yeah, you can turn it on, you can use it, you can check it out, see if you think it is something that's worth using. I'm not a huge trader based off of this ABC indicator, and I'm also just not a huge trader based off of like trying to calculate A to B to C and then to find D. So personally, I don't use this one. I'm not trying to put it down. If it interests you, read what he's sharing, memorize it, and apply it, So that's that. This is actually like a really good chart where it gives you what time the London session starts and ends, what time the New York session starts and ends, what time the Sydney session starts and ends, and what time Tokyo starts and ends. Always good to know, especially if you're trading futures, because you'll get spikes in volatility when London opens, when London closes. You'll get spikes when New York opens, when New York closes. Same thing. Sydney opens, Sydney closes. Tokyo opens, Tokyo closes. You'll see more volatility in the market during those time frames. This is another trading strategy. So like this is, I mean, it's your open drive, right? Start of the U.S. session, sell off, come back to that level, enter short. Daily open, where this is our open. When we finally move away from there, come back to it, you would enter calls. Or the inverse, if when we move away from there, it's to the downside, enter puts. And then he also talks about, like, I don't trade this as a standalone strategy. And then he'll explain what you want to use for confluence, right? Daily/weekly high and lows. And so he's saying, like, this is the daily high. Once we break through it, we're looking for confirmation, right? So we're looking for those 3 5-minute candles above, come back, retest, you would enter calls, right? A lot of people will try to trade breakouts where as soon as we break through that high, they'll enter into calls. It's not confirmed, and then it falls back below and they get stopped out. That's a big mistake a lot of traders make. When you're looking to do like a breakout, you want to wait for confirmation that price is accepted above that level, right? I will say, if you're trading based off of the stuff that I'm talking about, on trend days, you're going to have a hard time trading because you don't get a lot of retests. You don't get a lot of pullbacks. But trend days are the least common in the market. More common would be sideways or your the days that, you know, like where we slowly grind up or slowly grind down, where you are getting like, you know, breaks of levels, retests, and then going and stuff like that. I just realized I forgot to talk about the different types of profiles, and we definitely have to do that if we're doing a class on volume profile. So I'll do that after we finish going through this really quick. What I want to get to, I mean, I really think we've covered like all of the strategies that he talks about, but we really need to look at poor highs, poor lows, strong highs, and explain how to apply that to trading. But again, like daily low, breakthrough, wait for confirmation, short. And again, he's showing an example where it didn't work, right? So this is important. This is what I really want to get to. This would be so pin bar patterns where this is a bearish pin bar, where we have a long wick, right? Or a bullish pin bar where we have a long wick at the bottom. When we see these on charts, so like here, this is a strong low, because if we look at this wick, it's down here all by itself. There's no other candles down in this level, right? So here we have a strong high at the top. And the way that I like to explain strong highs is you think about them as like a brick wall, right? And let's just say, I don't want to refer to myself as a police officer. Not that there's anything wrong with being a police officer. I love our good police officers, but there's a lot of bad cops, and I don't like those ones. But yeah, I have at least a few friends that are police officers, and they're great people, and I love them. But anyway, tangent. But let's just say you're a police officer, and you have a battering ram, and you need to break into somebody's house. But in this case, instead of having a door, they have a brick wall, right? And you take that battering ram and you run at the door, and boom, it knocks you really far away. And this level was so strong, that brick wall was so strong, and the next time you try to come to it, it knocks you even further away, right? And you weren't able to get back up like all the way up to that wall because it was just way too strong. If it was a poor high where I have, or a weak high, where I have like a wick, the next time they hit this, this is a regular door and I'm hitting it with my battering ram, hit it with my battering ram, hit it with my battering ram, boom, 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 boom. And then the next time I hit it, I'm going to break through it. I'm going to break into their house, right? So strong high, price is probably not going to make it back up there. A weak high, I've hit it. The next time I hit it, I'm going to break through, right? And we were kind of talking about this a little bit at the beginning of this class, and we mentioned failed auctions, right? It's the same thing basically, where if I'm at an auction and the auctioneer's going, whatever, 1,000, 2,000, sold. They found a seller, or they found somebody to sell to up here at the top, and no more buyers. And then we dumped, right? Whereas in this area here, we never found a seller. Like we came up and we sold to some people, but then there was another buyer. Or sorry, I'm probably saying that backwards. We have a buyer, and then we had another seller and another buyer, a seller, another buyer, a seller, another buyer, so on and so forth. So like the auction was never completed because it never was one seller, one buyer, or sorry, no sellers and one buyer, and they were like, sorry, there's nothing left to sell you, right? And so when we look at this on the chart, the key is like if we have a strong high or a strong low, we want to exit our position before we get to this level, because there's a good chance they're not going to get to it the next time they come back up here. If we have a weak high and we're in a position long or in calls, there's a good chance that when we come back to here, they're going to break through that level and make a new higher high, completed auction, strong high, right? So now if we go back and look at the chart again, really quickly before I do this, because I don't want to forget, let me turn off this ABC pattern. On our volume profiles, so if we turn on session volume profile, I'm not on 30 minutes, but it does. I want to say it's irrelevant, because I'm not really worried about having the right levels. I just want to show the profiles, or the different profile types. And sometimes you're going to have to like, maybe even ask in chat or whatever, because sometimes it's not really clear. So like to me, I think this one is a capital B, right? It's not the cleanest capital B I've seen in my life, but basically what a capital B is a double distribution day, which means that we had a lot of volume traded down here, and then later in the day we had a lot of volume traded up here. Or it could be the inverse. We could have had a lot of volume here and a lot of volume here, but it creates a double distribution where you have that B-shaped profile, okay? The next type of profile that we're looking at, we already talked about this one, but we'll talk about it again. This is our D shape, which is where we kind of trade within that, that bracket, up and down, up and down, up and down. Of course, here they broke out of it, and here we broke out of it. But for the most of the day, we were trading in that 68% of our volume, right? In my opinion, again, these are the easiest days to trade. Our next profile you see on trend days. So this is a capital P, right? Where down here we have almost no volume. Up here is all of the volume. And actually, you could probably even draw it like this here, right? Like so this is a capital P. We also have, so like here, this is a very clear B-shaped profile, right? capital B. Another P shape here. The hardest one to find right now is probably going to be our D shape. A lowercase, sorry, not D, lowercase b. I guess this, it's kind of ugly. Double distribution again, right? This is a D, sorry, a lowercase b here. Right. So those are really the main types of profiles that you're going to be seeing on charts. There are some other ones like this isn't the best example, but I'll just kind of show it. It looks like a city skyline where like you've got skyscrapers all over the place. Just kind of a mixed bag of choppiness or some wild moves, you know. So anyway, that's that. Let's go ahead and look at this trade that I was talking about. Let's turn off our session volume profile. So this is a trade that I took, and I remember it. Again, I've used it so many times for like educational purposes. But when I took this trade, or when I placed my order, I think I had this information here or something like that. Actually, no, that's not right. It was like here. Actually, no, it had to have been. Oops. I don't know what I just did. Oh, perfect. I just messed everything up. Okay, back to to February 17th. Can we stop? Oh, wait. Oh, no. Okay. February. Oh, that's 22. Wow. Time flies when you're having fun. So it's like right here somewhere. Let's go down to our 5 minutes. I think it's here. That's the 13th. So it's somewhere in here. Okay, I see it now. All right, let me not mess this up this time. Let's go. So this happened right around 10:30 at night, and I was actually just getting ready for bed, right? And I was, I sat down at my computer, I think to shut it down, and I saw this right here. And I was like, oh, wow, that looks nice. So we have resistance, broken through cleanly, right? And I was like, okay, if we get 3 5-minute candles above this and then we retest it, that would be a great place to enter longs, because in this case, I'm trading futures, right? But I was like literally like going to bed, so I didn't have time to wait 10 more minutes to see if I was going to get those 2 candles above and then a retest. So I just entered. This is just going to be the most recent version, Johnny, of TradingView. I don't know what number it is or anything like that, but it's the most recent version. Yeah. This is the app, so I downloaded it from TradingView. Oh, and actually, really quickly, while I just looked at this, if you're trying to use volume profile, you have to go to accounts and billing, and like you need to buy if you're doing what's it called? If you're doing futures, you want this group here, the CME, CBOT, COMEX, NYMEX, CME group. It's $7 a month, right? If you're trading SPY, what have you, you're going to need the NYSE, NASDAQ, ARCA, OTC bundle, which is $9.95. I have both. If you don't have those, or if you don't have this, then your SPY levels or whatever, Amazon, Tesla, whatever, they're going to be off because you're going to be dealing with delayed data, and with delayed data, your volume at price will be different. And then same thing, if you're doing futures, you have to have this, otherwise your levels are going to be off. Because that's one of the common questions. Like people will be like, oh, I'm on 30 minutes, whatever, blah, 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 blah. But my levels are different than yours. It's going to be that you need live data. Otherwise your levels will be off, right? So anyway, with this trade, I just saw this, resistance broken through, and it was like a strong candle that broke above. Oh, thank you, Sarah. That was really nice. I appreciate that. So when we break through here like this, I started planning out my trade really quick, and I said long position, and I think at the time, let me see. So now I'm trying to remember. No, I must have had more information. Yeah. So, with this information, right, this is a strong high right here. This candle, right, which we just talked about. And so I want to close my trade before this, right? And so, at least I think that's what my thought process was. I picked 300 to close. And actually, in retrospect, maybe I'm a better trader today than I was back in February. But I really think I probably should have been closing this trade at the body of this candle, right? So at 296 versus 300. I guess I was being greedy, though. With this strong high up here, because again, if they sell off from here, fill me, then most likely they're going to reject from right there and then start making, lower lows, whatever, retest this, and then that's where you would enter puts and go lower because this is a strong high. So anyway, I guess I was greedy and I was looking for an extra 4 points. And I put my order right here at 270.25, and I went to bed, right? So right at my support resistance flip, I put my order. I don't remember exactly where my stop loss was. I think thought process was, if they're trying to stop me out, they're going to come like right to here, somewhere right through this level there. So I put my stop loss slightly below it. I know I definitely had a 2-to-1 risk to reward. So something like this. And then I went to bed. And then the next morning, I woke up. Well, actually, so like from here, I get more information. So if I had stayed up a little bit longer, I could have actually taken more profits, right? So if we play this forward, we actually smash through this level, right? And so now I don't have to worry about price selling off from here, right? So now if we step forward a little bit more, they actually created a poor high right here. So with that said, um, with this new information, I actually could have targeted 315, so like an extra 15 points, or I could have even tried for a little bit higher. Um, let's just say psych level right at 320. Okay. This part, and I'm being honest, I did not memorize this part where I don't remember where they end up rejecting from. But again, new information, but I'm already in bed sleeping. They went up and they made a poor high, right? And now you guys understand what that means and what that means as far as taking your trades and your stop loss and whatever else, or where to close your trades. But so now they made a strong high right here, right? Which actually, now with this information, I wouldn't want to try to close the trade there. I would want to try to close it at 315, or possibly even down here at like 313, right? But we'll just leave it at 315 and just kind of see what happens. I closed here, right? So let's step forward. They come down. Boom, I get filled to a T, right? So look at this. Some of you might not know, but NASDAQ futures moves in 25-cent increments. So that means I don't have any levels between 25. So like 0, 25, 50, 75, 1, 25, 50, 75, 2, so on and so forth, right? This came down. I don't know if you can see the high up here, or the low, sorry, here. Came 50 cents below my entry, so 2 ticks. So I was only red for like a split second, and then it bounced, and it said at some point in time, boom, I get my take profit gets hit, right? For people that don't know NQ, just to kind of give you guys an idea of what this looks like, NQ, every 25-cent move is $5, which basically means every 1 point move is going to be $20, right? And then this trade is 29.75, so you would multiply this by 29.75. One contract, you make $595 if you catch this trade. I will share this really quickly. I don't want to make this like about futures, but for people that strictly trade options, futures, there's no theta decay. So you can put your entry, you can put your stop loss, you can put your take profit, and these levels don't change. Whereas for people trading options, it's a little bit more difficult, like to base your stop loss on a level or base your take profit on a level, because you're trying to time where price will be, or the value of your contract will be when it gets to that level, and it's basically impossible to be perfect with it. Whereas futures, the price is the price, and the price doesn't change based on if we trade sideways for 6 hours, my profit target would still be here and my stop loss would still be here. Anyway, from here it gets pretty cool. What happens with this trade? They actually come back and would have filled you a second time. Wouldn't have stopped you out. And then here, this is good. Like, same thing we've kind of been talking about. If at any point in time during this trade I trailed my stop loss or whatever, I would have got stopped out. I never would have made it to my profit targets, right? We let this keep going. They would have hit my profit target a second time, filled me again, and would have hit my level a third time. So I could have took this trade 3 times, or is it 1, 2? I mean, you would have got in here, but 2, it would have worked, and then 3. Yeah. And then I think they finally come up and tap this again, if I remember correctly, but I don't. So yeah, if we were, targeting getting out before this strong high, again, I would highly recommend closing, like at the bodies of these candles here versus wanting them to go and make a new higher high above this old now information, because now we have new information. You would want your take profit to be at the 313 versus the 315, but in this case it did work out, right? And then from there they say peace out, Mr. Man, and they dump it, right? But anyway, just showing once again that like we find the key levels with our yearly levels, our monthly levels, our previous week levels, and previous day levels. But you can basically pick a time frame, look for an area where we keep rejecting off of, and then if they break through it with umph, the next time they come there, you enter long. And then you just use that information. Like, do I have a poor high? Do I have a strong high? If it's a poor high, they're probably going to break through and go a little bit higher. So you could either close the trade, right at the poor high here, or you could target a little bit higher, right? Do I have a strong high? Yes. Then in that case, you want to close like somewhere around the body of the candles before that strong high to get out of the trade. In this case, both would have worked. Both you would have been happy with. But you want to try to look at all of the information and just remember you have a good 15 minutes or more to plan your trade. So when they break through, and again, the best part about this setup is it's exactly what I've been talking about, where this resistance level finally gets broken. There's no wicking back below. We never touch the level again. Every single candle is well above this level. And then we finally come back, barely tap it to a T, and then go. And depending on, like what you're targeting, ideally, I would say the body of these candles here would really be where you want to be taking your profits. If you entered here, you might be a bit frustrated when they do this. But as you do this more and more, you're going to realize like it's way better to trust your levels and sit through whatever this is. Let's measure it just to be clear. Way better to sit through 5 hours and 50 minutes than to not trust your levels and close the trade early. Because again, over time, you're going to end up taking bigger losses than you are wins because you're not trusting your levels. And if this resonates with you, definitely sit on it and think about this. If when you're in profit, you are so concerned about not losing that money that you're considering moving your stop loss or even just closing the position outright, do you feel that way when you're red on a trade? And I'm pretty sure everybody would agree the answer is no. When you're red on a trade, you want to stay in the trade longer and hope that it reverses and goes in your direction so that you don't take a loss. So like, why, when the trade is in your favor, are you trying to figure out a reason to close it early? And when the trade is going against you, you're looking for a reason to stay in it longer. Does that make any sense to anybody? And I'm sure everybody's like, no, not at all. You need to like really, really let that resonate with you. And you really have to learn, like, so me as a future trader, as an example on this trade, right? If I do my long position tool, right? And this is the trade setup I'm looking for. And my profit target was at 300, just like I talked to you guys about. my stop loss was somewhere right around here. So I'm risking 14 points to make 29, right? We already did the math on the one side. It's $585. On my risk side, I was risking $285 to make $585, right? And so if we do negative 285 to make $585. I'll tell you one thing. So for me as a trader, the second I decide that I'm, so let's do this really quick. The second this happens and I go, oh, I want to take this trade. This is my profit target. This is my risk. If I take this trade, I'm risking $285 to make $585. I'll do this all day, any day, every day. No questions asked. I'm doubling my money, right? And before I even click buy, in my head, this is gone. This money does not exist anymore. I just lost $285 before I click buy, because there's a chance that if this trade goes against me, I'm losing $285. And by being a good trader, before you click anything that has anything to do with an order, you consider that money gone. It's evaporated. You lit it on fire. It's gone. Like the same as when you go to the grocery store and you get all of your groceries and you go up to the check stand and the cashier tells you, all right, that'll be $250. And you're like, what the hell? I only bought eggs. That $255 is gone, right? The second they tell you this is how much it's going to cost you and you swipe your card, it's done. It's gone. Same thing with your trade. Before you even click buy, you consider this money gone from your account. Like you don't have this money anymore. If the result ends up being this, cool. Then now you have this money back and some. But this isn't important because you have to be okay with this being gone in order for this to happen. If you're not okay with this, you can't get to this. When you're red on a trade, you should not be trying to figure out how to stay in the trade longer. And when you're green on a trade, you should not be trying to figure out how to get out of the trade earlier. Okay? Money's gone. Hopefully this happens. If it doesn't, it's okay because we already kissed this money goodbye. And then if we could trade consistently, 1 risk, 2 reward, or let's say our next trade is 1 risk, 3 reward, and that one hits, now we're way up, right? But we could also say we take one trade and this happens, and it was a 1 risk, 2 reward. And then we take another trade and this happens, and it was 1 risk, 2 reward. And then we take a third trade and this happens, and now we're break even. Obviously, we're not trying to be break even, but we lost 2 trades and only won 1 trade, and the result is still break even, right? That's awesome. Because then maybe next time we take a trade and this happens, and then we take another trade and this happens, and now we're way up, and then we take another trade and this happens, and we're still up, and then we take another trade and this happens, and we're up even more, take another trade and this happens, and we're up, 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 and then we take another trade and this happens, and so on and so forth, right? Logically, we're looking to have whatever it is, that 50, 60, 70, if you're really, really good, like 80% win rate, and you use that 1 risk, 2 reward, you accept your risk, you consider the money gone before you click anything, and over time, you get rich as hell by just trusting the process. For some people, they have to click buy, and then they have to, like, put their stop loss, put their take profit, whatever, and walk away because they can't stand to sit there and watch it play out. And that's fine. If that's who you are, do that. But I watch my trades play out. I don't move my stop loss. I don't move my take profit. Just the other day, like, I don't remember exactly the day, but I saw an 80% rule set up. And it was right at the market open. It broke back in to my value area low, retested. I entered the trade, and I was up like 24 points on ES, which, if you don't know what ES is, let me show you. So ES, same thing, moves in 25-cent increments. Each 25-cent is $12.50. So we multiply that by 4, it's $50 per 1 point move. You multiply that by 24, which is what I was up, and I was up $1,200 for one contract. And then a news candle hit and went boop. People probably think I might have been upset. I was a little bit salty because it was a news candle, but I accepted my risk before I took the trade. I wasn't risking very much. I think I was risking $300 to make $1,200. So technically I only lost $300, but if you want to be really technical, I lost $1,500 because I was up $1,200 before it did this. And my take profit was only a couple of points above, but this is going to be a rare occurrence where you're really close to your take profit level and it reverses and stops you out. But if you never let yourself get to your take profit level, if you don't allow this to happen, then you're never going to make it to your take profit level. But you're also going to have instances where this happens and you take the good with the bad. Sometimes they're going to come close to your stop loss, bounce, go hit your take profit. Sometimes they're going to come close to your take profit, reject, and go down and hit your stop loss. And that's trading. And if you can't accept that, then don't try to be a trader, because you will never succeed if you don't allow this to play out. Okay? I will say right now the class is essentially done. I have a couple of things psychology-wise that I want to cover that are definitely very important. But as far as like actually looking at charts, going over levels, going over, whatever trade setups and so on and so forth, I'm done with that. Definitely make sure you read Trader Dale's book on volume profile. Amazing book. What I would highly recommend, and this is the stuff I'm about to cover is super important. You might think I'm full of crap. I will try my best to convey to you how important this is, even based off of my own experience as a learner, as a beginner. As I was getting better and better at trading, I'll explain to you guys exactly like my thought process when I was told this stuff, because I thought it was a bunch of BS. And in the beginning, I didn't listen. And looking back, I wish I trusted my mentor and listened to him, but I didn't. And I went with the school of hard knocks and tried to do it my own way, and then figured out that that wasn't working. So then I finally listened to my mentor and applied what he told me, and then I saw like almost immediate results. So the first thing is, I highly recommend everybody that is not a profitable trader today that's in this class, that from today going forward, you limit yourself to one trade a day. And I know, sorry, who was it? Somebody asked. Oh, okay. It's actually the very last person to type. The official Stock Sage, should we have a cap on how many trades we take during every day as a beginner? And the answer is absolutely yes. The reason that one trade a day is so important is a lot of people, and also like let this resonate with yourself, and you'll probably realize that you do this, right? So if you feel like you have an unlimited number of trades, or even if you feel like you have 2 trades that you can take, or 3 trades that you can take in a day, like you might see something that's not an ideal setup and you're like, let me just try it, because if it doesn't work out, it's okay. I'll make the money back on the next trade, right? Or if you have an unlimited number of trades, you might go, oh, let me just try clicking buy here. If it doesn't work out, I'll make it back on the next trade. And then if that doesn't work out, I'll make it back on the trade after that, and so on and so forth. And then you're constantly trying to chase losses on the same trading day. And you just keep going deeper and deeper into a hole, right? Me personally, I'm a person that loves guns. So I always kind of compare this to shooting, or being in like an oh shit situation, where if somebody's trying to kill me, right, and they have a gun and I have a gun, and I have 1 bullet left in my gun, I am going to wait until I have the most perfect lined up shot on them before I pull the trigger, right? Because I only have 1 bullet and I can't afford to waste it. Same thing with trading. If I only have 1 bullet or 1 trade and I can't afford to waste that 1 trade, I'm going to wait until that setup is dead in my sights, where, yeah, there's a chance I miss, but more likely than not, based on my win rate, there's about a 70% shot that I'm going to hit my target, and I'm going to take the money and I'm going to run. There's a 30% chance that I'm going to miss. But so instead of having that haphazard thought process where I feel like I can just trade and make back my losses and whatever else, I'm going to be patiently waiting for a really amazing setup to use my 1 bullet a day to take that trade, right? And again, it might seem stupid, but my mentor told me to do that, and I was like, yeah, I don't need to do that. I'm better than that. I don't need to limit myself to 1 trade a day. That's a bunch of crap. That's not going to help me at all. Whatever. I'll just take as many trades as I want. And for a while I did that. And I was never profitable when I was doing that. And then there was a second thing that my mentor recommended that I kind of blew off because I thought it was stupid, and that's journaling your trades. So like, I can actually show you guys still to this day. I journal every single one of my trades. So this is going to be, what is this, the month of June? I don't know. Yeah, June 1st. So this might seem weird to people because I have trades on Sundays, but I'm a future trader. So you can trade Sunday evening. I haven't had the best 2 weeks. However, I also haven't had the worst 2 weeks. If you told me I could make $500 every 2 weeks trading for the rest of my life, or I could risk like making more, but also risk losing more, I would probably opt to make $500 every 2 weeks for the rest of my life. Actually, I take that back. I probably wouldn't. My journal generally looks better than this, but so the journal that I use is called TradeZella. It's very detailed. There's a lot of information you can put into this. I'm not going to go through it. I'm just going to tell you guys that you want to journal your trades. If me as a trader am still journaling to this day, there is definitely a reason for it. It's definitely worth your time, and it's definitely something that you should be doing. Again, kind of trash last 2 weeks. It is what it is. But I'm still net green, and I'll take that all day long, right? Like, yeah, I'll take this all day, any day, any day. This particular trading journal, I think, is like $350 for the year. In my opinion, worth every penny, because if I click on add a trade, I literally just click file upload, and I download my trades directly from my broker, and I click on this and I just upload the file and it imports all of the trades for me. And then what I do after I do that is there's an area where I can journal, where I actually go in and I talk about the trades that I take. So let's just say, for example, we're looking at this trade here, right? If I said, this is my SR flip, I'm going to enter at this price, I'm going to close at $300. When I go to journal my trade, I would be like, okay, whatever. On the 5-minute chart on NQ, I noticed a strong resistance level that was broken through with a big move above. They created a strong high, they created like a poor high. So I was targeting a little bit above. And actually now I remembered more of the story of this trade, which is, all right, it's not a little bit above. I made that up. Never mind. 300 is a psych level. So I was like, kind of safe to close it there, right? And so then I would say like, or I guess at the time this was a strong high, closing my trade below at the 300 psych level, stop loss here, whatever, based on this information. And then after that, this trade is weird because after the fact, they went and made a strong high at a much higher level, which would have changed the entire trade, or where I closed the trade, but that's irrelevant. And then on my journal, at this point, I would also go and reflect on what I did wrong on the trade, right? Like, let's just say I was awake during the trade, right? And for whatever reason, I'm in the trade and it starts going my way and I get nervous because there's like a pullback, so I decide to trail my stop loss, right? And I will acknowledge I'm not perfect, so there is times that things like that do happen when I'm trading, and I'll journal it. I'll be like, I'm a dumbass. I wasn't really trusting myself, whatever, or trusting the levels that I was seeing. It looked like the trade was going against me. I got nervous and I trailed my stop loss. Of course, it ended up hitting me and then goes and runs to my profit target, right? Or I might or when I'm journaling, I might have a conversation of what I did wrong. And it might be, I didn't do anything wrong on this trade. Like, everything was clean. Everything was good. Setup was good. Trade was good. Stop loss was in a good place, blah, blah, blah. I also reflect on what I could have done differently, right? Like, so if I missed, like, let's just say, I put my profit target up here and I missed the fact that there was a strong high, and like it ends up coming down and stopping me out. And I'm like, oh shoot, I didn't recognize the strong high, whatever, blah, 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 blah. I would journal all of that. What I should have done differently is paid more attention and had my, profit target at a reasonable level, based on the strong high, which I think we agreed was like 313-ish. And in which case, like, the trade would have worked out in my favor. So really, like, I reflect on the actual trade, like the factual information, entry, stop loss, take profit, entry based on this information, take profit based on this information, stop loss based on this information, what I could have done differently or what I could have done better, what I might have done wrong. And that way I can correct that on the next trade and not make the same mistakes again. Or if there was something that I could have done better, what I can reflect on, so that on my next trade, maybe I can improve on that and incorporate those things that I feel like I possibly could have done better. And then lastly, like what I did wrong, what I could have done better. And that's it. I feel I was going to say lastly, but that's it. And then I do recognize and I do understand, like, this is not affordable for everybody, right? And that's fine. There's a journal called Stonk's Journal. I believe it's just as good as TradeZella, and I'll post the link in the chat. This one's completely free. They do ask for donations somewhere. Anyway, free trading journal. I don't know, somewhere, and it's crazy that it's hard to find them asking for a donation, but they ask for donations, but other than that, it's completely free. It's a really good journal. The only thing that's missing that I know of is that you can't import your trades automatically like I can on TradeZella, meaning you have to type in all of the numbers manually. But again, if $350 a year is not affordable to you, free is very affordable. It just requires a little bit more time to actually type in some stuff, but still awesome, right? The other solution, if you don't want to use Stonk Journal, is you just go to Google and you can type in trade journal options Excel. So if you go to Google and you type in trade journal, if you're trading options, then you would type in options and then Excel. If you're trading futures, then you could just change this to futures. And then from there, you go to shopping, which, why is it not there? And then I found that there tends to be a ton of these on Etsy that are cheap, right? $7.99. This is a book. You don't want to use a physical journal. You want to use an electronic journal, because a physical journal where you're writing stuff will not give you the feedback that something like this will, where if we go to this, I'll just link this one in the chat just in case anybody wants this one. But like if we look, I mean, it's so small. Why is it so small? So it shows you like your average loss to your average win, and writing something on paper, it's not going to calculate that for you. Or it can show you like your win rate based on day trades or swing trades. Like I can't really see, my eyesight's not amazing, but this will give you a lot more information and it will calculate all of it for you, versus doing something on paper. You're not going to get all of that information, right? And then this one is even has that risk to reward. Oh no, it doesn't. It's saying based on percentages. Do not trade based on percentages. But yeah. But anyway, you can look through these, and you know, like here's one that's $5.59. I've seen them as cheap as a couple dollars. It's worth investing in. And then I'll say, like, if you're, if you're at a computer and you don't have Office, Microsoft Office, that's not a big deal. You can search for Office Libre. And this works for Mac and for Windows, and also, I guess, Android. So here you would choose, Linux, Mac, or Windows. Download it, install it, and this will work with that journal, just like if you were using Office from Microsoft. It's basically exactly the same thing. Okay. I think really quickly, I'll just say, if anybody has any questions right now, like now would be the time to ask. I think I answered all of the questions that have been asked so far in the chat. If you did ask a question and I didn't answer you, please ask it again right now, because I'm not trying to ignore anybody. It would have just been that I missed the question. But also, I just said that really quick because I want to finish talking about like the journal part. Kind of the same thing. My mentor Shorty told me, you know, 1 trade a day for 6 months, journal every trade. I thought it was a bunch of crap. Didn't do it. Kept losing money or being like a break-even trader. And it wasn't until I implemented both things, 1 trade a day for 6 months and journaling my trades, that I finally started becoming a profitable trader. It really does make a huge difference. As stupid as it might sound, it is huge because you actually like take time to sit down and reflect on the trade. When you journal, it should take you, I would say, at least 10 to 15 minutes for 1 trade to really reflect on everything and be really honest with yourself about what you could have done or what you did wrong, what you could have done better, what you did well, right? And then the goal is what you did wrong to eliminate from your trades, what you could have done better to implement into your trades, and then what you did right, you want to keep doing, obviously, right? And so all of that stuff just really makes a huge difference. And I would recommend anybody that's not profitable right now to do the 1 trade a day for 6 months. Focus on only what we've talked about today. So read Trader Dale's volume profile, implement the strategies that he talks about, use the volume profile, you know, your previous year, previous month, previous week, previous day, to use for entries on trades. Always look for the 80% rule. And again, just to be clear, 80% rule, you want to be outside of value for at least 45 minutes, come back inside for at least 15 minutes, retest, and then you would enter, you know, from one extreme to the other, from either value area low to value area high or value area high to value area low. So focus on only trading those things until you feel like you really have grasped and have a really good solid foundation of trading with just volume profile. And once you've done that, then I would recommend going to my YouTube channel, find either TPO or time price opportunity taught by Shorty. Watch that video on that and then implement that into your trading. And then you use volume profile with confluence with TPO. And then basically just over time, you want to slowly add more and more confluence places to your trades. And then basically like you'll get to the point where you're getting stopped out less by using more confluence. So like I said, really quickly, this will be the last little piece of the puzzle. But if you ever see this happen where price comes up to here, and then they do this, so these are your candles. I didn't draw this perfectly because I just realized like, but then they go and retest this. Oh, I know why I didn't draw it right because I'm drawing. Oh no, I did. Sorry. Or you go, oh yeah, so Rocket said, you know, get in here at the bottom, right? Draw my fibs, enter at that golden pocket. So we're going to have to fudge it here. There's my golden pocket. And, you know, we should break out and go to the 272 level. Well, can almost guarantee you, like, if this was whatever it is, like our previous day value area high, and the bull flag forms below it, this is the result that you're going to get. Okay. You want to see break through that key level, form your flag above, get in on the retest of our value area high, or whatever it is, value area low, play it up to your 272 fib. Okay. This is where like trading off of patterns alone doesn't work. And this is where trading with volume profile, with confluence, with patterns works. Okay. Of course, there's always that whatever 20, 30% probability that this fails. But here you're looking at more at like a 80, 70% chance that this fails. Okay. I do see somebody asked a question, and I'll answer you right now. Beginner, not profitable yet. Listen to this entire class. I feel like I'm data dumping. In the beginning of your trading journey, how are you able to implement what you were learning? I'm not sure exactly what you mean by data dumping. Maybe you feel like it's information overload. That's how I'm interpreting what you said. If I'm wrong, let me know. That's totally understandable. Watch this video again. Take notes. You know, like if you're watching live and you want to keep up with the class, it's kind of hard to take notes and like listen as the class is going. So I would highly recommend rewatching this and doing it at your own pace and pausing the video, taking notes. If basically right after this video, DAJ, look in the calls and puts chat, and I'll share something with you. If I had my webcam on, or actually I can turn it on really quick. Give me a second, guys. I'll be right back. All right, webcam coming on. Oh, let me turn on my lights. It's kind of dark in here. Okay. So, I don't know. I think when I was learning, maybe a little bit harder than what it might be for you guys right now. And that's because, and actually I'm glad this came up because this is really important. You have to be really careful who you're absorbing information from, right? Some of you might not know me from a hole in the wall. Some of the people that are in the chat can speak for me, where they've been with me long enough that they know I'm not doing this for financial gain. Actually, I'll be very candid with everybody right now. I am being compensated by Keenan, like, for doing this class, but his requirement was to do a 45-minute class. If this was about money, this class would have ended, I don't even know, 3 hours ago? Like, if this was about financial gain for me, this class would have been done 3 hours ago, because I have no reason to be here, right? None of this has ever been about financial gain for me. I've done tons and tons of classes on YouTube. My mentor does classes on YouTube. I'm trying to show you guys something here, and it's like, why is this weird? There we go. I go live, I would say roughly, I don't know, 50 hours a month. And this is how much money I make on YouTube.
if you think, I mean, like, you guys don't know me, but I work as a respiratory therapist. I also have a background in IT where I can easily charge $150 to $200 an hour to go to people's houses and fix their computers. Um, I'm not doing this for money. And then you might be able to argue like, oh, but as your channel grows, like this is going to turn into, and like, I don't even care if my channel stays right where it is. Um, that's not what it's about for me. If I can help one person today, awesome. If I can help 10 people today, even better. If I can help 300 people today, way better. Because one day I'm going to go stand before God and he's going to go, wow, you really like took a lot of time and did your best to help as many people as you could. And, you know, you deserve a really good life in the afterlife or whatever it is, you know, or maybe some good karma while I'm here on earth, you know. I'll take all the good karma I can get. This is not about money. If we divide like whatever this is, we'll just say $300 just to be 300 divided by 50. Roughly, I'm like $6 an hour. I could go work at McDonald's and make like triple this, right? Um, it's not what it's about. So, um, anyway, my point was when I was learning this, I never, like, it was coming directly from my mentor, right? And he was saying, you know, like, be careful who you listen to, kind of the same thing I was just saying. Again, you might not know me from a hole in the wall. And I think to the average person, this might just be words, but I'm telling you, like, you can actually trust me. I'm not trying to scam anybody. I'll never message you and be like, hey, join my Discord. Like, oh, I'm selling this course. Like, none of that will ever happen. This is about trying to help people grow and get better as traders. And anyway, the information that you're going to find on this channel is actually valuable and it's actually helpful. And it can like actually turn you into a professional trader. If that's what you're looking for, right? Which I assume that's the goal of most people here, right? So with that said, when I was learning, like I couldn't just go to YouTube and watch a random video because I had to be really careful who I was learning from. And I was being mentored by an amazing man. His name is Shorty. And he used to be a market maker. And we would do one-on-one classes like on Zoom, right? Or on Discord. I don't even remember, like Discord, you know, private message chat. He would share his screen. I would screen record every single like class that we did together so that I could go back through it and take notes and do whatever else. For you guys, you just click on the YouTube link and it's going to be there, right? Not saying that like my struggle's harder than your struggle, but I had to make sure I recorded my own classes, you know? And then from there also just like reading a lot of books, but like books from very specific authors, right? All of Trader Dale's books are amazing. Another amazing book would be like The Best Loser Wins. Highly recommend that book. Trading in the Zone, Volume Price Analysis by Anna Cooling, Wyckoff 2.0, all really worth a read. But first, focus on trading with volume profile only and what we've talked about today for like at least 6 weeks, if not 2 weeks. I mean, 2 months until you feel like you could do it with your eyes closed. And then how I learned was like I would take my Trader Dale book, and this is why I turned on my webcam, and you can see like I have notes. Oh, sorry, like not on my screen. I have very, very detailed notes with drawings, and they're even color coded. And I've got notes upon notes upon notes of everything. And that's how you learn.
And so if for you right now it feels like information overload, you got to step it back and slow it down, rewatch the video, take notes, study your notes, watch the video again, take more notes, study your notes, until it all clicks, right? It's a lot of information. But then also beyond that, make sure you grab this book. Um, why will it not let me pull it up on the screen? That's weird. Anyway, it won't let me like click on it, but read Volume Profile by Trader Dale and take notes on that as well. What I covered today is amazing information. Trader Dale's book is probably going to be a little bit more detailed than what I was today, but I'm trying to cover, like if I were to sit down and write a book, like I could cover, every single little detail and I can disseminate it to somebody. But sitting here trying to cram a ton of information into, what only had to be a 45-minute class, but that's impossible for me. If I do a class, it's going to be a minimum of 2 hours. And in this case, we're over 4 hours right now, right? Rewatch the video, take notes, read Trader Dale's book, take notes. If you're new to trading and you don't understand market structure like I was talking about at the very beginning, read Getting Started in Technical Analysis, take notes. Every single one of these books that I'm mentioning to you, I have in my library, and I've read and I've reread and I've read again, and I'm glad I just thought of this. There's one book I forgot to mention. I don't know why my computer's acting funky as... Oh, there we go. Okay. That was weird. I couldn't earlier, I guess I had to close my calculator. It wouldn't let me open up any app. I was stuck on whatever was on my screen. I'm going to share the link to this. This is going to be the most important book that you can read. And it might sound like the stupidest book. I can't emphasize this enough. People, when they worry about trading or whatever, they focus so much on setups and trying to figure out where to enter a trade and where to close a trade. Of course, those things are important, but without trading psychology, you will never become a good trader, right? And so the book that I'm sharing with you is called Trading in the Zone. The best trader in the world that I know read this book like 30 times. Yeah, read this book. Pull it up on the screen really quick. This is Trading in the Zone by Mark Douglas. And it's literally all about trading psychology. When you read this book, if you've traded before, you might feel like this dude was looking over your shoulder when you were taking trades. It feels very personal. I wanted to fight him when I read this book. I was like, dude, you're an ass. Because he calls you out on so much stuff that's without even knowing you. He'll call you out on stuff that you've done a million times as a trader. And you're like, how in the hell do you know that, dude? And it's because he lived it too, right? So with that said, it looks like we have answered all of the questions. Let me just really quickly read through. Ryan Reed, if you're asking that question, then you didn't watch the whole video, but there's a tool called the long position tool on TradingView. If you go from the top of the indicator or from the drawing tools, it's going to be the fifth one down. You click the little arrow out, and long position and short position are right here. Okay. But I did cover that earlier, so I'm not really going very in depth on it. But yeah, rewatch the video and everything's on there. Again, just reading through the chat really quickly to make sure I didn't miss anything. Thank you, Hulu. I think that's how you say your name. If it's wrong, I'm sorry. Jamela is easier to pronounce, possibly. Thank you. I appreciate that. Thank you, Keith. All right. Looks like we've answered all the questions. I really, really, truly, honestly hope everybody takes what I've said and moves forward with it. 1 trade a day, 6 months, journal every trade, plan your trades, plan your setups, use the long position tool, use the short position tool, find key levels for stop loss, find key levels for take profit, look at the chart, look left, always look left. If you're confused, look left. The one thing I did forget to mention is you guys see me do this, or people that follow me, there might be some new people today, but the people that see me do this every day, like basically Sunday through, what's it called? Sunday through, that's weird. Where did all my levels go? Oh, well. Sunday through Friday, I go through and I chart, SPY and whatever. Oh, it's because I have this on. Sunday through Thursday, I go through and I chart SPY, and I figure out where I want to enter calls, and I figure out where I want to enter puts. You should start doing the same thing. Look at the market when the market's closed. Look left. Look at your levels. Figure out where you want to get into trades, where you want to be in calls, where you want to be in puts, where you want to close your calls, where you want to close your puts, so on and so forth. Because once the candlesticks start moving, it starts messing with our psychology, right? And it's harder to make decisions when the candles are moving. And if you can plan out your trades when the candles are not moving, it's a lot easier. Okay. That's really all I've got for you guys. We'll definitely be doing more classes. But that's going to do it for this one. I think 4 hours is good. With that said, really, if you're new here, I would love a sub. Channel is all about, I find levels. I also go over option setups that I'm looking for. I chart SPY daily and cover where I would like to be in calls and where I would like to be in puts. If you're not new to the channel, as always, much love, much respect. Peace out, everybody. We will see you.